This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo. Jobs Day in America. Jeff Yu coming up in moments. Great lineup. Neil Dutta, Claudia Sahm.
Yep.
Around the 8:30 number to talk to us about labor in America. Paul, what are you looking at?
Yeah, it's interesting, Tom. I think expectations are for, still a relatively solid labor market.
I know, the
perhaps.
numbers look pretty good.
They look pretty good. I mean, is it slowing? Sure, we got unemployment above 4%, but I don't know. The labor economists tell me that's not unusual for a reasonably strong economy.
I talked to Mike McKee about the whisper number.
Oh, the whisper number.
150,000.
150,000. Okay, we'll keep an eye on that.
150,000.
Yep, the consensus is 165,000, Tom.
Then there's the revision of the whisper
Right,
number.
exactly.
I'm kidding, folks. We'll have it all for you, including Mike McKee's expertise. We'll go beneath the headline data here at 8:30. I am stunned. They just sent me the August numbers for what we do here. We did it without Lisa Mateo. She was off for 3 weeks.
I know.
Lisa, there's a big asterisk next to August because Lisa wasn't here. But the answer is Apple CarPlay. Good morning, Android Auto. I don't really understand it, Paul. Do you use it a lot on the Vespa?
Use it a lot, absolutely.
You got
right
Apple CarPlay on the Vespa?
Not on the Vespa, although there is some technology there, but it's all over the family vehicle.
It's amazing. Yep. Safer, better. Apple CarPlay, Android Auto as well. Good morning, digitally across America. Special good morning, first jobs report, 92.9 FM across all of Boston, from Block Island to Millinocket. Let's dive in right now from the Interactive Broker Studios. Our Bloomberg Business Flash, Lisa Mateo.
You got it. We've got futures falling. Traders, they're gearing up for what the new jobs data, what news is going to deliver for today. Economists, they're looking for a gain of 165,000 jobs, with the unemployment rate ticking down about a tenth to 4.2%. So right now we have NASDAQ futures down more than 1%, 216 points. Dow futures down 0.3%. S&P futures down about 0.6%. The 2-year yield at 3.71%. That's down 2 basis points. The yield on the 10-year 3.69%, and that's down 3 basis points. To commodities, oil set for the biggest weekly loss in almost a year. We have Brent crude right now at $72 a barrel, WTI crude at $69 a barrel. Shares of Broadcom, the chip supplier, Apple, other big tech companies, lower, down about 8%. A weak non-US, non-AI sales. That actually hurt its forecast. That's non-AI sales. And that could be the reason why NVIDIA shares are lower. They're down about 1%. Other chip stocks checking in with Super Microcomputer down 2%. Advanced Micro Devices down about 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Joining us now to get us started strong, Jeff Yu with a global perspective on this jobs report as well. Jeff Yu, moments ago, I had renminbi. It's 7.08. I've got West Texas Intermediate giving me almost a $68. Maybe Brent crude goes to 70. Is there a global slowdown? Is that what the Bloomberg Launchpad tells me?
Well, I think the global slowdown has been in the price for some time, ever since August. It's a question of, is it a soft landing slowdown globally, or is it something harder? So, that's the question being asked around the world right now. From China's point of view, with respect to oil, let's bear in mind they rely on coal more than anything else. So that's why the Aussie dollar is often worried about where Chinese demand is. I was half expecting a triple R cut today by China, actually, because of the comments from the PBOC yesterday. That would have, I think, set things in motion quite nicely ahead of payrolls. Alas, doesn't seem we're going to get it. It normally happens, before the US Open. But let's see. I do think, though, that heading into year end, China does want better growth. The question is how they're going to do it and what's the impact on the rest of the world.
Jeffrey, how are your investor clients in Europe viewing the non-farm payroll number here today? Because obviously it presumably will have a pretty big impact on what the Fed does later this month.
Well, it's going to be the seminal event globally for the rest of the year, because where the Fed leads, most of the rest of the world will follow. Let's look at Europe or Latin America, where these large positions are. If the Fed is going to be more dovish than expected after non-farm payrolls today, then that opens up policy space around the world. Other central banks can say, okay, if the Fed is doing this much, then we can do a bit more as well, provide some relief for borrowers on the household and corporate side. So it is absolutely essential today.
So, Jeffrey, the markets that you look at are and the investors that you talk to, is the expectation that the Fed will ease by 25 basis points or maybe even something more than that?
I think there's a difference between what they think the Fed will do versus what the Fed should do, right? And it's always a way for investors to hedge themselves, afterwards. But do they want to take on the Fed at this point? No. I guess the general bias is towards 25, again, pending today's number. Right. If it's a bad number, then they'll be happy to entertain a 50. But the main message is, whatever the Fed does, it cannot send a signal of panic. And that's what Chair Powell is singularly going to be focused on.
Jeff, you're within the dynamics of real GDP, nominal GDP sliding lower. There's an interest rate reaction by central banks. Does that support economic growth, or are they distinct and separate?
One word, leverage, right? So how leveraged is the household, how leveraged is the corporate, and how leveraged is the government, right? So, that's where these rates start to matter. In Europe, there's going to be a big debate about, when or whether the ECB is going to cut rates aggressively enough, because they're still worried about, household spending. The European households in general are less leveraged. On the other side, here in the UK, household cash flow is still relatively positive right now. So the BOE is going to be a bit cautious. For the US, from corporates and households, those with fixed rate mortgages, they're still doing okay. But do you want to transmit that to the rest of the economy? So it is idiosyncratic, whereas in China, they're trying to reduce mortgages for everyone.
When you look at the Bloomberg, what's the one statistic you look at? You walk in the door in the morning. What's the statistic you look at?
Well, right now, I'm just scratching my head. Why is euro-dollar up here? I'll be very frank. Of course, my parity
as an amateur, as an amateur, I agree on that. We know you're looking for weak euro as well. Why do those currencies get support if we have the mother of all sovereign effect?
Well, this is all, very well in hindsight and I'll hold up my hand and say, I was pretty wrong on this. We're only finding out right now how much in terms of the long dollar trade is right now. Because if you look at data in Europe, it's bad. The more pricing for the ECB to cut, that's what I was expecting. Yet euro is higher right now. So all of that is saying that as US rates are coming down or are expected to come down quite aggressively, more and more people are taking off their euro-dollar positions, and they're taking off their long dollar-yen carry trades as well. So, those are the two to look at. And then you look at the volatility indicators. Are we going to see a nice gradual move, or is it going to be a repeat of the first week of August? Right now, probably somewhere in between, but markets are not looking for strong shocks at this point.
So, Jeffrey, across Europe, broadly defined, how is the economy across Europe? I mean, we focus a lot on Germany because obviously it's the largest economy over there. But what's the word over there?
It depends who you ask, right? If you look at the PMI results, and for manufacturing, it's been contracting for 2 years now. So that is what I'm singularly focused on. But the ECB will point to the wage figures, and they'll point to services inflation, strong government spending, and say it's firm. And the thing is, if you look at German GDP, so weak investment, weak household, but strong government spending. That was the only source of upside surprises in Q2. So the ECB does not have a growth mandate, doesn't have an employment mandate. So they don't need to look at manufacturing technically and say, well, yes, job losses in the car industry, but services inflation still high. The Fed does not have that luxury. So that's where we lie in between where euro-dollar is.
Off your remit, if we get a Jeff Yu world, what do equities do?
So right now, equities will be stable. I don't think there's much risk reward in adding aggressively at this point. And also look at the sector, look at the region, right? So tech trades, I think medium to longer term investors, their capital market assumptions will still be strong. I want to look at where equities are underpositioned. So that's where you will still see upside. I'm looking at APAC, I'm looking at where value is, where you can get your bang for the buck in terms of moving out of dollars and moving into higher yielding currencies or undervalued currencies. So I think APAC is where I think equities can still outperform, and also where markets are not positioned for positivity. What if China does do a strong Q4 in terms of stimulus? They've been talking about it. We're seeing some numbers on the table right now. China growing at 6.5%, for example, for Q4 at least. That is something the market is not positioned for globally.
Well, thank you, Jeff Yu, for getting us started this morning. We start strong with Jeffrey Yu at BNY Mellon. Ben Laidler later in the 8 o'clock hour after Sahm in Dutta. We're working on some people in the 9 o'clock hour. Anna Wong's playing hard to get. I mean,
She's
we'll
a
talk
player.
to her people.
We'll talk to her people.
Talk to her people.
Ask nicely.
Stuart Kaiser in the 9 o'clock hour.
In studio.
Always Tiffany Wilding will darken the door with PIMCO. Some good post-jobs report perspective. Futures at negative 33. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa, one day after a teen gunman opened fire at Appalachian High School in Georgia, charges were filed against two people. Georgia Bureau of Investigation Director Chris Hosey says the accused shooter, Colt Gray, has now been officially charged as an adult.
Colt Gray, that was arrested yesterday for this incident, has now been charged with 4 counts of felony murder.
The GBI's Chris Hosey says Colt Gray will be in court today. The 14-year-old's father, Colin Gray, has also been arrested, charged with involuntary manslaughter and second-degree murder. Now, a pair of back-to-back legal hearings involving former President Trump. Bloomberg's Amy Morris reports.
Today's hearing is before the Second U.S. Circuit Court of Appeals, which will hear arguments in Trump's appeal of a jury's verdict last year that ordered him to pay $5 million to writer E. Jean Carroll after finding him liable for sexually assaulting and defaming her. Yesterday's hearing was over whether the former president can be prosecuted for election interference after the Supreme Court indicated that presidents have some immunity. Special counsel Jack Smith's office has until September 26th to file an opening brief on that issue. Trump's lawyers have to respond by October 17th. In Washington, Amy Morris, Bloomberg Radio.
In a surprise move, President Biden's son, Hunter, pleaded guilty to federal tax charges in Los Angeles. The guilty plea comes after the court was preparing for jury selection for his trial over his failure to pay $1.4 million in taxes over 4 years. Hunter Biden's defense attorney, Abby Lowell, spoke outside the courthouse in Los Angeles.
Hunter put his family first today, and it was a brave and loving thing for him to do.
Attorney Abby Lowell, the president's son, now faces up to 15 years in prison and a fine of up to $1 million. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Okay, my date calendar. I got Green Bay, Philadelphia, Friday night football.
Tonight.
Yeah. So there's Thursday night, Friday night, a few games on, no, there's no Saturday.
No Saturday.
A few games on Sunday, then the Michael Barr Bowl on Monday.
Yeah.
How far are we from Tuesday night football here in Greed America?
I mean, when these technology companies get involved here and they can stream it all over the place, it's just gone crazy. Both college and the NFL used to never put anything on Friday. Why? Because he didn't want to compete with Friday night lights. High school football in America, you never wanted to compete with that. Now they're kind of throwing that away a little bit.
You know, there's a story that it costs $2,400 a year for the average viewer like me, Geezer Barr, to try to watch all of the football games because you got to get all the streaming services in if you have cable as well. Yeah. So, you know, they know they're king.
So that's why you're taking the Gulf Stream out to San Francisco.
That's pretty
cheaper.
It's cheaper.
Yeah, so I will not watch tonight's game because I do not have Peacock and I could care less.
There's a point where you just say
Who
enough.
cares? NFL, have fun. Take your money.
I mean, Lisa took all of television away at the Mateo house.
I know. She runs a ship over there.
Tough as nails.
Cut it
There's
out.
no Captain Crunch in that household.
You got that right. No Raisin Bran either.
No.
The VIX 22.26 showing some of the tension out there on this jobs day. We're on YouTube. Subscribe to Bloomberg Podcasts on YouTube. Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got red on the screen. Traders getting ready for key jobs data that will determine the size of a Federal Reserve interest rate cut later this month. The S&P 500 futures pointing to a fourth day of declines. Right now, they're down about 0.5%, 32 points. Dow futures down 0.3%, 139 points. NASDAQ futures down 1%, 197 points. We have the two-year yield at 3.71%. That's down 3 basis points. The yield on the 10-year 3.69%, and that's down 3 basis points. To currencies, we have the dollar weaker, Japanese yen stronger, up 0.4% at 142.88 against the dollar. Euro, British pound weaker. Bitcoin little changed at 56,000. Shares of U.S. Steel higher, up 3%. Cleveland Cliffs top executive told CNBC he's actually still in the market for his rival's assets if Nippon Steel's takeover bid falls through. Cleveland Cliffs up about 0.5%. Meanwhile, Reuters reporting Nippon Steel proposed a national security agreement to ease those concerns, U.S. concerns about its offer with Nippon Steel, down about 2% in Japan. Other companies making news. Intel, sources say the company weighing a sale of some of its stake in Mobileye as part of a major strategy overhaul. And finally, Berkshire Hathaway sold another $760 million of Bank of America shares since Tuesday, reaping almost $7 billion since the disposal started in July. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. Again, the VIX up 2 big figures, some real stress in the market, 22.22. What's the key data item for you, Paul, right now?
We'll see. Obviously, at 8:30, Tom, we're going to get some the jobs, the non-farm payrolls, and we'll get some smart people to help us out around that, putting it into context, because, Tom, that seems to be one of the final data points that the Fed will take into consideration as it thinks about
September
what to
18th.
do. Yep, absolutely.
Yeah. Right now, I just looked at the Bloomberg Total Return Index of bonds. This is real simple, folks. Price up, yield down. The price is up 14% off the mat, going back to somewhere in the vicinity of October 2022. There's been a real price up move in bonds. Joining us now, Kathy Jones, Chief Fixed Income Strategist, Charles Schwab. Can we continue to see price up? Do you see what I'm going to call, Kathy Jones, a yield regime that is a lower yield from here?
Yeah, Tom, I do think that all roads still lead to lower yields. Now, we've had a huge move already over the last 6 months or so. But, when you look at the underlying fundamentals, inflation is coming down. It's pretty close to that 2% target. The Fed is poised to ease. The economy is looking softer, which means the potential for inflation is lower. And then you look abroad and you see, weakness in China, weakness in Europe, lower rates around the globe, and you say, what's to stop this directional move?
And Paul, to me, when I look at the international stuff, like with Jeff Yu of BNY, I say to myself, wait a minute, does that carry over and drag our yields lower, price up?
Yeah, absolutely. We got the two-year Treasury at 3.71%, off 3 basis points today on the short end. Kathy, when the Federal Reserve meets September 18th, what do you think they will do versus what do you think they should do?
Best guess is right now they will do 25 basis points. So just hearing enough caution from the various members about moving too fast still. You could tell, some are on the side of a faster move, but others are still hesitant. So I'm not hearing at least the kind of consensus moving towards 50. I think they should do 50. I think should just get going and get it done. But I understand the caution as well. They seem to be happy with lagging the data. And so that's where I come out on it. They probably will do 25. I think they should do 50.
The two-year Treasury, as I just mentioned, 3.71%. It was 5% not too long ago. So as you mentioned, the Treasury market seems to be already pricing in, rate cuts. How about the credit market? Do I want to take credit risk in this type of environment?
Well, we've liked investment grade credit, higher credit quality, although high yield has performed. I mean, below investment grade has been doing well just because the all-in yield is so high, right? You're clipping that coupon of 7% plus, and that's and riding the wave of lower yield. So it has been working. But I do think you want to stay sort of up in credit quality. So for most investors, that would be investment grade, and you're still getting pretty decent yield there. And the economy's not falling apart. Corporations have solid balance sheets in general. Cash flow is good to pay the bondholders. So we think IG is still good.
On a chart basis, I looked at the real yield. It was giving me no love this week. All of a sudden, we go to 4 decimal points. 92.9 FM in Boston doesn't know that.
That's
Friday,
how we do it.
We go to 4 decimal points with Kathy Jones of Schwab. Kathy, 10-year real yield 1.6489. That's really right there. Does the real yield come down with the nominal yield?
It's doubtful from here that there's much more to go. You know, real yields were significantly higher 6 months ago, a year ago. Now they've come down quite a bit. It could go all the way to 1%. I doubt it. I doubt we get that much of a decline, but I think the real yield at the long end of the curve has already made most of the move that it's going to make.
What do you see on issuance? I mean, when you and Liz Ann Saunders get together, the equity spirit, a little fragile right now, futures negative 33. The Kathy Jones spirit, I mean, is this going to be a frenzy of CFOs saying, let's go?
You know, if they haven't already, I would think there should be solid issuance going forward. I mean, a lot have already issued. We've had very high issuance across the board recently over the last year or so, but I would think that it would be prudent to lock in some of these lower yields for corporations that haven't done it.
I just noticed, Paul, we have Jeffrey Yu, BNY, Kathy Jones of Schwab.
Solid.
James Steele, I completely missed that.
I know. We're
the
doing
best
commodities.
guy on gold in the world.
Absolutely. That's coming up in studio.
Who's booking us? The interns left.
The interns left. I don't know who's doing this.
The interns walked out the door and the booking got better. I don't know what that's about.
Kathy, talk to us about credit risk out there. I mean, are we seeing it? I just don't see, even as the economy softens a little bit, it seems like we're not seeing a lot of real stress in terms of credit quality out there in the marketplace. What are you seeing?
Yeah, there's two things going on. One is that a lot of companies were able to, term out their debt, lock in those lower costs for the long term. And corporate earnings have been solid. They've grown. They wobbled a little bit last quarter, but they've been pretty solid. So the leverage in the system hasn't really been at the corporate level that we've had to worry about, and we haven't had a full-out recession. But the second thing that's happened is you've had a lot of private financing come into the market. And so when we look usually for default rates on lower credit quality bonds, particularly in high yield, et cetera, what we see is instead of defaulting on the bonds, they're doing what's called distressed exchanges. So you've got private capital coming in, and that kind of precludes the defaults rising as much as they could. It's bad if you bought the bonds at par or above. It may be good if you're one of the distressed buyers buying at a discount, but it's kind of taken the defaults out of the system where they usually are visible.
This has been valuable. Kathy Jones, thank you so much there on the guesstimate of price up, yield down, sort of the magnitude of the move we could see. I didn't hear a news-making, ginormous magnitude there. Kathy Jones on this Jobs Day. Thank you. Can I go way audible? Can I go way off target? We have the advantage here, folks, and there's the amount, like when Paul's asking a question, I'm looking at the wall of data. When I'm asking a question, Paul's looking at the wall of data. Lisa's always looking at the wall of data. This just came in over the transom. Boeing strike watch. George Ferguson, Melissa Belzano. Folks, this is out of the blue, but I'm sorry. IAM 751, they may strike, which would halt the manufacture of 737s. I mean, that's all Boeing needs.
Just can't get out of the way.
Exactly.
Boeing. I mean, for the last 3 or 4 years, it's one thing after another, and it calls into quality. It calls into question just the overall engineering quality at Boeing, which they can't. That's not good.
Have you noticed in the last couple of years, Lisa, help me here? You get on the planes now and they look more run down than they used to.
I don't know.
No.
No, I wouldn't.
It's just some of them have TV screens, some of them don't. Some of them have plugs.
Yeah.
If they could just have the plugs to charge your phone, that's all I ask for.
I was worried about the wings and the engine.
No, it's the perks.
Different conversations here. It's Jobs Day. Futures ugly, negative 30. The VIX up 2 big figures. From New York City, Bloomberg Surveillance. Stay with us.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures in the red as investors worry that a worse-than-expected monthly non-farm payrolls report would push the Fed to kick off its policy easing cycle with this jumbo cut. Now, the Fed's Austin Goolsbee told MarketWatch that the longer-run data trend justifies cutting rates soon and then steadily over the next year. And Mary Daly told the Wall Street Journal that further slowing in the labor market would be unwelcome. Right now, NASDAQ futures down 1%, Dow futures down 0.4%, S&P futures down 0.6%. We have the 2-year yield at 3.72%. That's down 2 basis points. The yield on the 10-year 3.70%, and that's down 2 basis points. Deal-making news, we have 7 & I. They actually rejected Couche-Tard's bid as too low, but they did say they would consider a sweetened offer. We have 7 & AI down about 1% in Japan, Couche-Tard up about 1% in Canada. Salesforce buying data protection management solution provider OWN for $1.9 billion. It's actually the company's second acquisition this week. Salesforce down about 0.5%. And sources say Shari Redstone will get $100 million in severance and other benefits from that Paramount deal. Nice. Paramount down 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash.
Was it sneaky that Larry Ellison decided to do this? The zeitgeist last night was that he's going to own Paramount. Is that correct?
He's going to be the largest shareholder. I think what was surprising in what was reported is that how much equity he personally is putting in, as opposed to other partners.
How will it be run if Mr. Ellison runs it with all your experience?
He's basically buying this company for his son. You go
baloney. Stop it. Yep. Larry's never done that. He owns half of Hawaii and Tahiti as well.
Exactly.
He built the waves at the Olympics.
I know.
Come on. Larry's going to run this thing. What's he going to do?
I don't know. I have no idea. And shareholders are just like, just give me my money. I'm done.
On YouTube, Good Morning in Bangkok. Thrilled at the evening broadcast across the Pacific Rim around to India. It's a world James Steele knows well. Great question out on YouTube for James Steele. Thank you so much. Gold's correlation. Now, my correlation of gold and silver is I look at the Elsa Peretti cuff at Tiffany's, and it's under $2,000 in silver, $1,550. Nice. And I'm walking out large with an 18-karat gold number at $19,000. Do I want to hedge that? Do I want to short the gold cuff and go long the silver cuff?
Well, if you look at it in those terms, of course, you have to take into labor and all sorts of other things. But there's no doubt that gold, generally speaking, over the past 12, 18 months or longer, has outperformed silver considerably. And that,
is there a correlation? That's what our listener and viewer wants to know.
There is a gold-silver ratio, and traders do look at it. And it can deviate from anything between 70 to 1. That's to say 70 ounces of silver to 1 ounce of gold, up to near 100, well, over 90. And it got to over 90 earlier this year, which implies that gold is strong relative to silver, which you could further extrapolate to that either
I hate you.
silver's
so you're saying
going
go
higher.
With the gold cuff.
I'm saying that.
Yeah, please.
I always like silver. However,
Paul,
nice.
Put a cork in his mouth.
Exactly.
Let's go.
Spot gold up 22% year to date. Talk to us about China and what China's doing to the gold market, both in terms of their central bank and just consumers.
Well, the Chinese demand, there's two great giants in the physical arena, and that's India and China. And if you combine both of them, you're talking about 50% of all the physical gold demand, roughly, and also sometimes higher, and also 50% or sometimes higher of all the jewelry demand. Yep. In the world. Now, China has been a bit quiet recently. The price is rather high. They were very good earlier in the year. Their imports are about flat. The most recent data up very, very slightly. India got a big boost when the government reduced the tariffs, but have since that's since calmed down. So the physical market in Asia is, I think, verging on being sluggish given the high price.
The Hong Kong and Shanghai Bank has a vault, which we're not going to go into the details about because it's secret, but it's pretty ginormous. And there's a place that was in a James Bond movie called Fort Knox. Does China have a Fort Knox? Does James Steele know where China's keeping all its gold?
I do not know where China keeps its official sector gold, that is to say, its central bank gold. Now, a number of countries around the world either have their own facilities to own gold, or they leave it with the Bank of England or with us. We will hold. Well, I'm not saying which central banks, but smaller central banks that might have a security issue. And we're not the only ones. Other facilities hold central bank gold for smaller central banks.
What's driving the price? What are the primary drivers of gold recently? Just this year, again, up 22% this year.
Yeah, I think a couple of things. Firstly, I think general geopolitical and economic uncertainty has been a driver. And this is what is tough for any other analyst listening in, is that you can say to me, James, when the Fed cuts by 50 basis points or when they cut by 25 basis points, what does gold generally do? And I can go back and we can look at it empirically, and we can do regression analysis and come up with some idea. But every geopolitical event is different, and that's what makes it tough. But the geopolitical risk index is high, the thermometer is high. That plus expected rate cuts and some recent dollar weakness. This has been what's propelling gold higher.
Help us with the dynamic of your guesstimate out 12 months, or frankly 36 months, to go out 3 years with gold. Dennis Gartman's made a huge splash by looking at it in weaker currencies. Maybe now they're reversing, stronger currencies, weaker dollar. But how would you buy gold now if you couldn't buy Krugerrands to put in your bedroom dresser, like my mother did?
ETFs, if you don't want to own the
ETFs.
Own the physical, if you don't want to keep it at your house, and you're going to have it longer term, so you don't want to keep rolling a futures contract, the ETFs, that's what they were created for. They were created for someone who wants to own gold but does not want the difficulties of insurance and storage. So that's one of the ways that one would do it.
Member only item.
Yeah, go.
1 ounce gold bar, PAMP, Swiss Lady, Fortuna Veriscan.
Nice.
New and essay, Costco.
Yeah?
You go.
Costco?
Lisa can go to Costco and
She's
buy
a member.
1 ounce.
She's a member. She
24
gets picks up her gold and then gets the hot dog.
One transaction per membership.
Yeah, one transaction. All right, the supply of physical gold. Talk to us about the supply of gold. Where are we today versus history, and just in terms of the supply of gold physical into the marketplace?
Well, this is interesting because 70%, more than 70% of all the gold that's ever been mined in the history of the world has been mined since 1900.
Wow.
And more than 50% of all the gold that's ever been mined has been mined since after 1950. So we're seeing record high levels of production right now. We're well above the costs of production for just about almost every mine in the world. But, you know, it's a question of God, not of mammon, of geology, not of money.
Okay.
We are going to get further out this decade. We will probably begin to flatten out as far as gold production goes. Ore grades are dropping. It's getting increasingly more difficult. That we haven't found a mega deposit, that's to say plus 20 million ounces, since 1997. And so now that doesn't mean we're going to run out of gold, because we have plenty above ground. But for the next couple of years, we're above 3,500 tons.
James Steele of HSBC with us here on Jobs Day. We're going to continue with Steele and extend this right now. Futures negative 33, the VIX 22.06, two big figures. So how does James Steele react to the Bitcoin rationalization that it's gold? It's not, is it?
No, and I should correct myself. That's over 3,500 tons.
Okay.
I'm sorry.
Yep.
No, Bitcoin is not gold. Look at it. What is its nature? As Marcus Aurelius said, right, in Meditations. Look at everything and say, what is its nature? Gold is physical and it's tangible, and that's one of the reasons you want it. Bitcoin is not. And I'm not negative on Bitcoin. I'm agnostic, but it's not gold. It does not have the longevity of gold and does not have the antiquity and does not have the physicality.
In that TV show Rome from a million years ago, there's a scene early in the first season where they steal, it's not Aurelius, it's before that. It's like Pompey and Caesar, and they're stealing Pompey's gold or something.
Yes.
I mean, back then, it's pretty much like now. You know, if you're in Rome and
you've got gold.
You know, Mrs. Keene needs a Peretti bracelet, you know, nothing's changed, right?
No.
Basically, your world, nothing's changed since
No,
Rome.
and you might find this from a historical, your listeners might be interested in this. You're talking about the gold-silver ratio. For thousands of years, we had a steady gold-silver ratio of 10 to 1, 10 ounces of silver to 1 ounce of gold. It wasn't until the discovery of the Americas and the enormous amounts of silver that the Spanish and the Portuguese brought back. They didn't bring back so much gold, they brought back silver, and that altered the gold-silver ratio forever.
Wow, where do we get silver? Where do I find silver these days? Where do I mine it?
Silver's mined in almost every country.
Really?
To some degree. Canada, the United States, still big. Australia, still big. The big increase in deposits are in Latin America.
Interesting. We got an election coming up here in the United States. The political risk, does that impact the gold market? Do I just buy gold because I want to minimize my risk to something crazy going on in November?
Well, very much so. And this is the case, you know, when I talk to people about, you know, should I buy gold? And I say to them, well, there's two things you have to consider. Are you looking for it to appreciate, which is one question, or are you looking for it as a hedge, as a safe haven? And in the case of political uncertainty, you know, it's the safe haven and it's the hedging aspect that you would want gold, and certainly an election in the world's largest democracy.
I mean, Lisa, help me out here. I mean, you took afterthought to school, and half the girls are wearing Tiffany silver. You know, Dad got it or Grandpa got it for some necklace. What is the markup on silver and fancy jewelry? Is it worse than gold?
It's very, very high. Yes.
It's worse than gold.
It's higher than gold. I wouldn't necessarily use the term worse. You see, you still have you have just as much labor going into silver, which is much cheaper than gold. So therefore, the percentage markup is likely to be a lot higher.
So you can rationalize that, Tom, when you're buying the
I'm
silver
just
locket.
trying to get to the weekend here.
It's all about the blue box, isn't it, Lisa?
Yes, you got to get the little blue box. I know.
So is gold? I mean, just real quick, James. I mean, I don't see a scenario where gold doesn't go higher. I mean, what's the bear case for gold?
Well, it's extraordinarily high now.
Okay.
But just to give things a little bit of historical context, and in January of 1980, which I actually remember.
Sure, I did too. It was a good time for me.
Lisa's far too young to have remembered anything like that. But we hit $850 an ounce, which is over $3,200 today.
Okay.
In today's money. Brilliant. So there is historical precedent for the market to go, say, higher from here. But I'd remind everybody that we've moved into a profound bear market for the next 15 years. Very steep and severe.
Off of that gold surge in 1980.
More than that, more than 20 years. And the physical market, already we're seeing very weak jewelry demand, very weak.
Go away. Mrs. Keene is texting into me saying, extend this guest. Make him go
more
longer.
gold.
James Steele, thank you. The Return to Tiffany heart tag toggle necklace. Lisa, are you kidding me? $925?
Is
worth
that what
every
it
penny.
That's
it's
what
an
those.
investment. It's great.
It's an
See?
investment.
He
Yeah,
says.
go away. Leave with James Steele. James Steele, you are so done. James Steele with HSBC. Thank you.
Best.
World class, the best, as Paul says. The best on gold. Thank you for those smart questions out on YouTube. Subscribe to Bloomberg Podcast. Good morning, 99.1 Washington, 92.9 Boston. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures falling. Traders are waiting that big report on Wall Street that they've been waiting for, the August jobs report. They're also going to be tuned into a speech by Federal Reserve Governor Christopher Waller that follows it. Right now, we have NASDAQ futures down about 1%, 199 points. Dow futures down 0.3%, 158 points. S&P futures down 0.5%, 32 points. To the bond market, the 2-year yield 3.73%, down 1 basis point. The yield on the 10-year 3.70%, and that's down 2 basis points. Also, companies rushing to the U.S. debt market, record-breaking $80 billion in bonds sold since Labor Day, and an additional $28 billion in leveraged loans. We'll check with commodities. We have spot gold lower, $2,516 an ounce. Brent crude, $73 a barrel. WTI crude, $69 a barrel. Companies making news. Big Lots. They were actually supposed to report second quarter earnings today, but the company put a press release out, said they postponed it until September 12th. And after a decades-long absence, Panasonic Holdings returned to the U.S. TV market. Yeah, their flat panel models now available on Amazon and also at, yes, Costco. And speaking of Costco, the wholesale retailer, solid sales in August, total traffic increasing,
Killed it.
E-commerce sales increasing. You're welcome. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash.
Joining us now, surveillance Costco correspondent Lisa Mateo. Saturday or Sunday?
That would be Saturday early to beat the crowd.
Saturday early to beat the
has
crowds.
to be early.
So if you go early, what is it you're looking for? Is it like strip steaks or?
I go straight to produce and meats. That's where I go to right away.
That's I've heard this.
That's where I see.
Because I'm very unhappy at my emporium of fruit and all. Costco has good produce.
They have good produce. It's in bulk. You get the most for your money. And
come on, what do you buy? A year's supply of bananas?
Oh, and the eggs.
Eggs.
You have to get the 3 dozen eggs.
Sure, who doesn't? Buy in bulk.
Yes.
Your Costco report this morning. Look for Lisa Mateo in aisle 4, Chamorro. Paul, let's go over ECO Go. We got Jobs Day in 45 minutes. Neil Dutta, Claudia Sahm, Ben Laidler with us as well.
8:30 a.m. Wall Street time. The change in non-farm payrolls time, the consensus is 165,000.
Whisper,
Last month it was 114,000, and the whisper number WHIS Go on the Bloomberg terminal shows about 151,000 is a whisper number out there for the
unemployment rate comes in.
Yep.
It's a positive screen. Why do I see this carnage? Negative 31 on futures. We're out to 22 on the VIX, and I'm looking at this ECO Go. I don't get it.
I think that's the whisper number. It's a little bit of concern in the marketplace, and there's the talk I hear is it could be any number. It could be just all over the place.
I have respect for that, any number.
There's not a lot of belief in the consensus.
And the denominator with immigration, folks, immigration is a mystery.
Exactly.
Serious about it. No question. Let's digress right now.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Good morning on YouTube. We say to you all, subscribe to Bloomberg Podcast, Apple CarPlay, Android Auto, 99.1 FM Washington, Bloomberg 1130 New York. Good morning, 92.9 FM in Boston. Your daily look at the front pages around the world, brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest costs. Global trading, turnkey custody solutions. No ticket charges, no conflicts of your interest. Do that at ibkr.com/RIA. Lisa?
All right, we're starting with TikTok. They had that possible ban going out. Apparently, it's losing American support. So Bloomberg has the story out. It's a survey from Pew Research. It showed many Americans, they shifted their stance in the past year and a half. So just 32% U.S. adults backed the TikTok ban. That was compared to 38% last fall. And this is not kids. This is adults. These are adults that are surveyed for this. So it didn't ask them why their opinion changed, because I was asking, well, what's the difference? Why are they thinking different? It didn't say why they changed. They did say that it's divided along party lines. That's a difference there. But
Paul, do you use TikTok?
I do not.
Lisa, do you use TikTok? Come on.
Only to follow my kid.
Oh, so you say.
But still the issue is, it's owned by ByteDance, which is a Chinese company, and so the risk of having U.S. consumer data owned by a Chinese company, that's the risk. Is it still with the government? Is the government thinking about what to do? Is that kind of where we are now?
That's where it is. They have until January to basically sell the app or face the ban.
Oh,
so
okay. Because that was signed. That's a law signed by President Biden. So something's going to happen.
Correct.
Okay.
My amateur take is everybody's trying to be the new TikTok. Everybody wants this short attention span.
Yeah,
generally
short
cutesy
videos.
by kids, little, Instagram, all of them.
You can get lost in that for
It's a
hours.
You just keep scrolling and
It's
scrolling
it's
for like
ridiculous.
20
Should we
minutes
talk to
goes
Tom
by.
Secunda about TikTok on the Bloomberg Professional
Oh, sure. Yeah,
Service?
I can
That
see
would work
happening.
out.
Yeah, that would
Next.
work out.
We have to get him on Bloomberg. Okay, this is from the Wall Street Journal. There's been this battle of public versus private beaches. This is along Florida's coastline. It's actually Walton County, 26 miles, beautiful beaches, all right?
Absolutely
But
the best.
half the beach is private. So only residents can do it. So a lot of beachgoers, they have to do these big signs that are put out. There's even security guards. So if you're not part of the private beach, you have to stay out. So the public beaches are now packed. This, though, has been a law forever. Like, it's been around for a long time. The reason why it's an issue now is because it's becoming more crowded, more developed.
Is it state by state? Because some of the New England climes I've been in, it's just understood it's private. But then the great venture capitalist Vinod Khosla had a running battle in California for years with
exactly.
your kids
I know.
walking across his beach.
I know. Well, in California, having owned a home there for a long time, all open. I mean,
It is,
and
okay.
dogs are. It's all completely open. New Jersey, probably, you have to have the badges. You
I
have to buy
pay.
badges.
I
Yeah,
pay to
exactly.
go on the beach in New Jersey.
Yeah, I mean,
About
and they
$13 a
say,
person.
oh, it's for the maintenance of the beach and replenishment of the beach, and I don't know. But
So
people
what's
are shocked
happening in
when they come
Florida?
to New Jersey.
So because of that in Florida, it's this battle between, the residents and people who are visiting. So now they want the law to change, but the people who live there saying, hey, this has been the
I'll
law
tell you,
since
the
forever.
beaches on Destin, Florida,
Beautiful.
the nicest beaches I think I've ever been on. The perfect sand, water, just extraordinary there. You wouldn't think it, but it's awesome.
But they say it's not fair. All right. Still for sale 12 years later. We've been talking about the housing market, right? Houses going off like this. I mean, I'm being outbid left and right. But you know whose house is still up for sale? Michael Jordan. Yes, his mansion. His estate north of Chicago, 56,000 square foot home. It first listed for $29 million back in 2012. Later dropped to about $15 million. It's still unsold.
Wow.
The reason why, experts are saying it's just too Michael Jordan, right? It's highly personalized. That's kind of tough to sell. It has this big entrance gate with the 2-3, on the gate. A lot of flags with a silhouette across it. The movie theater has his, silhouette. He has these certain things like the doors from the Playboy Mansion. And here's the biggest part is that it's about 2 miles west of the waterfront houses that are lining Lake Michigan, where everyone wants to be.
Right.
So Michael Jordan wanted to be private, so he
Okay,
moved away
but-
from there.
Doesn't he clear the market this weekend with an open house and drop the price? I mean, that's
No,
usually
but
what you do.
He's been paying housekeepers, managers, security staff. He's paid over $1 million in taxes since it was listed back in 2012.
56,000 square
It's
feet.
huge.
That's the size of Delaware.
Yeah, exactly. I mean, it's just unbelievable. But hey,
Rhode
I
Island.
guess
No
he
one
can afford
wants
to
it.
wait. But I mean,
But
like
exactly,
enough is
that's the
enough.
thing.
Just
He can afford
I would
to
just
wait.
say to my brother, just move it. Whatever price he needs. Put it up to
Next.
auction.
And finally, now you're up for the iPhone update, correct,
Yes.
Paul? Okay, you're
Boom.
going for it.
Next week.
Here's what you might get, okay? I know you're not a big social media person,
Exactly.
but Apple has cleared WeChat ahead of that iPhone 16 debut. WeChat, it's like this Instagram-like WeChat Moments. It has live streaming.
Big in China.
Yeah, yes, exactly. China's Tencent. That's who owns it. It's a big deal because Apple approving that update basically eases those concerns that a dispute over fees, it could block the app. So this is a big thing that's happening with the new iPhone 16. So there you go. You'll have that update.
I used
when you
WeChat
get-
when one of my kids was in Europe for a
Oh, you
semester
did?
because it's just you can call and do all that stuff and it's free and I don't know. So she just said use WeChat, Dad.
Yeah.
That's it. I don't use it anymore.
There are, yeah.
Well, it's different from WhatsApp. WhatsApp is a different thing.
What
Yes.
I get them confused.
Yes.
Well, thank you, Lisa Mateo with the newspapers. Thank you so much. It is Jobs Day. Really focused on that. We'll do that in 30 minutes. Really looking forward to it. Neil Dutta will be with us with an update. Congenitally optimistic on the American economic experiment. A little bit of an adjustment there with the recent tensions Claudia Sahm will join us after Mr. Dutta. I was supposed to have dinner with Claudia in Jackson Hole.
Yeah?
Yeah, the pilot on the Gulfstream said, we can't do it. Bramo can't do it.
All
So
right.
I had to say no, which was terrible. Important date, best concert ever, August 30, 10 years ago, 2014. Tom Petty, Fenway Park, Bloomberg Surveillance.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in that fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. I'm Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo. Jobs Day in America in 29 minutes. We'll give you that data. We'll go beneath the headline data with Neil Dutta. Claudia Sahm will join us as well, without question the most influential economist of this 2024. We'll ask her about the recession thing and all that, but we'll get a lot more out of Dr. Sahm than just the parlor game. Paul, is there a recession? Is it a softer hard landing?
Exactly. I mean, and again, non-farm payrolls, the expectation is for 165,000, a little bit lighter than what we've seen over the past, 12 months or so, but still a solid print. The unemployment rate, Tom, forecast to be 4.2%, down from 4.3.
But the tape, and I'm trying to find the right language here. I got $69 on West Texas Intermediate. I got a renminbi out to new strength in China. Wow, through 709, 7.08, stronger yuan in China, and 8 other statistics. There's some stress out there into the ECO Go that looks pretty optimistic.
Yeah, exactly. And
I don't
think
get it.
there's
I'm
a
lost.
little bit of concern about where this number could come in.
Got an incredibly important guest coming up across this half hour, and we'll be with you without commercial interruption here, of course, at 8:30 as well. On YouTube, subscribe to Bloomberg Podcast, Apple CarPlay, Android Auto. Thank you. Stunning August for Apple CarPlay around the world. Greatly appreciate that. And, of course, on 99.1 FM Washington, Bloomberg 11:30 a.m. in New York, our flagship station, as they say. And good morning across all of New England, 92.9 FM in Boston. From the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
Good morning. Yeah, futures still falling. Traders getting ready for what news the jobs data will deliver for today. NASDAQ futures down about 0.9%, 172 points. Dow futures down 0.3%, 134 points. S&P futures down 0.4%, 27 points. The 2-year yield 3.72%, down 2 basis points. The yield on the 10-year 3.69%, and that's down 2 basis points. Commodities, oil set for the biggest weekly loss in almost a year. Concerns about soft demand, enough supply. We have Brent crude at $73 a barrel, WTI crude at $69 a barrel. Shares of Broadcom, the chip supplier for Apple, other big tech companies, they're lower, down about 7%. Weak non-AI sales, that hurt its forecast. And that could be the reason why NVIDIA shares are lower. They're down about 1%. I want to check in with other chip stocks like Super Microcomputer. They're down about 2%. Advanced Micro Devices down 1%. For on-demand news 24 hours a day. Subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. We're going to slide into a conversation now, really important for Global Wall Street. Good morning. Gershon Distenfeld, a name Global Wall Street knows. Thrilled that he could join us today with AllianceBernstein. Gershon, I got to do an audible right now. You're like legit poker player. And with all of your success and investment, you've taken the philanthropist route. You've done all sorts of good stuff, including the Michael Schneider Fund. Of course, we miss him every day from AllianceBernstein and DLJ Bear Stearns years ago as well. Tell us what you've learned from poker that helps you in the investment and finance world.
Well, Tom, first of all, thank you very much. Thanks for having me on. And thanks for bringing up Mike Snyder. We do miss him very dearly. Like, I think both, and first of all, I also want to point out I'm not a huge poker player. I literally play once a year. My job is to manage bonds for our clients at AllianceBernstein. I go to the World Series of Poker once a year, so I wouldn't call myself a big poker player, but I have had some success. Look, I think there's some similarities between the game and investing. I think that I'll mention a couple. One, that we're always making decisions based on incomplete information. Right, we can research the economy as much as we want, or a company. There's still a lot more we don't know than we do know, and the same thing is true in poker. I know my cards. I don't know my opponent's cards. I don't know what my opponent thinks my cards are. I don't know the cards yet to come. So one has to make decisions in life. It's true in investing, in poker, in lots of things, based on incomplete information. And the second thing I think is very important is that we need to think in a range of outcomes. Right. I mean, it's a mistake, for example, to say, I think the payroll number today is going to be 100,000 or it's going to be 200,000, and therefore I'm going to do X. You have to think it could be lower, it could be higher, and I got to make my bet based on that. Same thing in poker. I know my opponent's cards may be this, it may be that, it may change based on what comes out, and I have to make, again, those decisions based on incomplete information.
So, Gershon, as I look at the INGO function on the Bloomberg terminal, the Bloomberg Index browser, and I look at the fixed income space, the best return at 6.54% this year was U.S. corporate high yield. What's behind that market and that performance?
Well, I think things have been very, very rosy. You go through kind of the ebbs and flows of the data that's come out, and the economy has remained very, very strong. You also have companies that are, in pretty good shape relative to history, if you believe that we're in late cycle. If you think that there's some probability of a hard landing, which, it's not our base case, we think there's some probability, companies will go into that in much better shape than they have really any other downturn. So corporate fundamentals are strong. You actually look at the high yield market in particular, it's actually never been higher quality. Especially relative to the past 40 years, many more double Bs, many fewer triple Cs. So, in this kind of benign, I would call it, average type of growth environment, high yield actually tends to do very, very well. One of the things that we've been preaching for quite some time is that, high yield is thought of as a fixed income asset class, but really it's more correlated to equities. And, it doesn't go up as much as equities in the good times. It hasn't performed as well, obviously, in the past few years, but it doesn't go down as much in the poor times. And investors should think a little bit about, instead of taking kind of some of their fixed income exposure and increasing the risk, maybe take some of your equity trips off the table and still probably keep most of the return.
Gershon, if we get price up and yield down, and I look at the Bloomberg, the Lehman, the Barclays index, and it's just amazing how they're not there, folks, but they're getting back in some form reversion to the trend over the years. What will CFOs do? I mean, can I predict a massive amount of issuance, and reset in your world?
Well, you talk about still in the credit world, we're still not that far removed from very, very low all-in yields. And most CFOs, or I should say many CFOs, did the smart thing years ago when, an investment-grade company could have locked in 10 or 30-year financing at 3% or even sub 3%. Even high-yield companies, strong high-yield companies were able to lock in 4 or 5% over 10 years. So there's still some runway on that. Now, not every company is in that situation, and certainly if all yields go lower, we could see more refinancing out there. But again, companies, it's part of the reason why I said before that balance sheets are in such good shape. You don't have a tremendous amount of liquidity events when you look at companies across the board.
Gershon, what do you expect your Federal Reserve to do on September 18th?
I think I expect them to cut 25 unless you get a really, really weak number today. I think they should cut 50. I was an advocate when they were raising rates. They should have raised those rates a lot more. If you believe that monetary policy is too restrictive, which we do, they should just get at it and start cutting rates and end the year, 100, 150 basis points lower. Again, I don't think they're going to do that. I think they're going to take a more cautious approach. They don't view on the upside when they were raising rates, a cautious approach worked out okay. They're going to do the same thing here. I do think it's really important that investors don't overreact, though, to today's number. I mean, the markets will, of course, if it's weak or strong, the markets will react accordingly. But the Fed has been very clear. They talk about being data dependent. They're not data point dependent. They don't just look at one thing. They take a multi-month kind of view of things, and we should recognize that unless the data consistently comes in weak over the next few months, they're likely to go at a moderate pace.
Gershon, thank you so much. Gershon Distenfeld there, philanthropist, and also with Alliance Bernstein on this jobs day. Again, to tape a little bit better than an hour ago, the VIX was out two big figures. We're out 1.83 figures, 21.73 on the VIX futures, negative 30. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. The 14-year-old boy accused of fatally shooting 4 people at a Georgia high school is expected to make his first court appearance today. Colt Gray has been charged as an adult with 4 counts of murder. Authorities said the teen opened fire at Appalachia High School in Winder, just outside of Atlanta, killing 2 students and 2 teachers. 9 others were wounded. Meanwhile, his father, Colin Gray, was also arrested for allowing his son to possess a weapon. Georgia Bureau of Investigation Director Chris Hosey.
Colin is Colt Gray's father that was arrested yesterday. He is charged with the following: 4 counts of involuntary manslaughter, 2 counts of second-degree murder, and 8 counts of cruelty to children.
GBI Director Chris Hosey. The FBI says they received tips last year about possible threats posted to social media by the teenager, but no arrests were made, lacking probable cause. In a surprising turn of events, Hunter Biden entered a guilty plea in a Los Angeles federal court to all 9 criminal tax charges against him. Hunter Biden was charged with tax evasion and filing a false return during a 4-year period. The federal election interference case against Donald Trump has inched forward. A judge permitted prosecutors to file court documents later this month. Secretary of State Antony Blinken said he expects the U.S. and other mediators to present a new proposal for a hostage exchange and ceasefire deal between Israel and Hamas in the coming days.
As close as I believe we are to getting a ceasefire agreement, every day that goes by where it is not finalized and the parties don't say yes, period, is a day in which something else happens. And there is an intervening event, which simply pushes things off.
Secretary Blinken made his comments while in Haiti. Blinken also announced another $45 million in U.S. aid to Haiti. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Great talking to Gershon Distenfeld there about his philanthropy in poker. I mean, I'm sorry, the YouTube feed, it keeps it going every day with original thoughts. You got to know when to hold them, know when to fold them, know when to walk away, know when to run. Original thoughts from YouTube. Good morning to the memory of Kenny Rogers. Yep. Don Schlitz wrote that song years ago. I had the great honor of meeting him briefly at the Bloomberg Cafe years ago, but that song became an industry for Kenny Rogers.
And don't ever count your money when you're sitting at the table. That's right.
There you go. Michael Barr adding it as well. Thank you out on YouTube for that. It's just great. I mean, Gershon's a legend. He was a legend.
Is that right?
And then he does a whole charity thing where, it's like six figures.
Well, he won a bracelet at the World Series of Poker back in 2020.
He goes out.
He did?
Yes. I was just Googling him.
Yeah, he's like a real deal. And he does it all for charity now, and including Michael Schneider was a legend. And I think at MacKay Shields, when he tragically died way too young in Florida. And this is what some of our guests do.
Yeah.
Wow. I had no idea he won a bracelet.
Yep.
And he does it for charity now.
Yeah.
Interesting.
Wow.
So,
I'll be doggone if I do it for charity. If I'm out there.
As
do
he says,
you want to sing the gambler out here, Michael?
Wow, that's fascinating. That's good for him.
Yeah.
Good for him.
Great to have him on here. And of course, we go to Jobs Day here in 15 minutes. We're on YouTube. Subscribe to Bloomberg Podcast. That's the number one way you can help Lisa Mateo besides moving her carts at Costco. 99.1 FM Washington, 92.9 in Boston. Good morning. It's Jobs Day.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures in the red, traders getting ready for key jobs data out about 15 minutes from now. That's going to determine the size of a Federal Reserve interest rate cut later this month. S&P 500 futures pointing to a fourth day of declines right now, down about 0.5%, 31 points. Dow futures down 0.3%, 156 points. NASDAQ futures down nearly 1%, 187 points. The two-year yield 3.73%, down 1 basis point. The yield on the 10-year 3.70%, and that's down 2 basis points. To currency, the dollar weaker. Japanese yen up about 0.2%, 143.14 against the dollar. Euro, British pound weaker. We have Bitcoin down about 0.4% at 55,000. Shares of U.S. Steel, we've been talking about this for days. They're higher right now, up 2%. This is after Cleveland-Cliffs top executive told CNBC he's still in the market for his rival's assets if Nippon Steel's takeover bid falls through. Cleveland-Cliffs, they're up about 0.5%. Other companies making news, you have Intel. Sources saying the company weighing a sale of some of its stake in Mobileye. It's part of a major strategy overhaul. Intel up 0.2%, Mobileye down 4%. And Berkshire Hathaway sold another $760 million of Bank of America shares since Tuesday. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Lisa Mateo. That's that is a Bloomberg Business Flash. Tom and Paul.
Here's the way we roll. Lisa, thank you so much. Here's the way we roll. We believe in equities, bonds, currencies, commodities. It's jobs day. We're going to kill it here. Neil Dutta will join us in about 7 minutes, but we wanted to squeeze this in as we had James Steele with us earlier on gold. Now on oil, the chemical engineer from Macquarie, Texas, Vikas Trivedi, darkens the door of our studio, thrilled that he could be here this morning. What's the level of panic at OPEC?
Yeah, quite a bit. They know that they are in a jam. They cannot really put their barrels back in the market and recover some of the market share they've given up voluntarily without hurting the price even more. And so they were hoping to reintroduce the barrels in a tighter market with a better price. Kind of obvious, but it just hasn't worked out. And we think that's still bearish because now they're scrambling to figure out better compliance, which hasn't been great, and pushing the decision to put the barrels back in the market forward again. Right, so it's just it's a problem of a whack-a-mole type where it's like I do one thing and I'm going to give up market share.
Whack-a-mole is if you do chemical engineering from Houston and Texas, you
That's
can get away with that.
Yes. But he finally redeemed himself with an MBA from Vanderbilt, so that's good. Is it a supply story or is it a demand story, or what's really driving the bus here? Because Tom and I, it always gets our attention when WTI crude oil is below 70.
Yeah, look. Figuring out what crude oil is going to do is probably a 70 to 80% supply side analysis.
Okay.
Meaning if you get the supply wrong, you're going to get the whole thing wrong most of the time. And right now we happen to have both stories. We have way too much oil, too much supply, and that includes in our mind the oil that's waiting to come back from OPEC. But we have a demand story as well. Demand is not in great shape. It's probably right around 1 million a day of growth. Earlier in the year, the consensus was 1.5 million. So it's come
Where's
down.
EM demand? Where's Pacific Rim demand? The Uber bulls 3 years ago were hanging their hat on that.
Yeah, it's a real mixed bag. The big EM, China, is really in tough shape. Their diesel demand is almost flat, and that's been the biggest source of oil demand in the world is Chinese diesel. It's getting hit by the lack of construction activity, and it's getting hit by a really big factor, which is trucking. They're moving to natural gas fuel trucking so rapidly.
Interesting. Did your father have a VW diesel? I mean, there was a point where you had to have it. It was like a badge of honor.
I am not a diesel person.
You had a VW diesel, and then he went away.
Yeah, exactly.
Yeah.
So,
but let me add one thing to that.
Yeah, sure, please.
So China is in bad shape on demand, but India is rapidly rising, and now not on a small base, but a bigger base. And the Middle East, oil demand, especially diesel, is holding up really well. So, it's a mixed bag, but without China, nothing really works well for demand.
We're commercial free here across the nation, around the world. Paul Sweeney and Tom Keene coming up on Jobs Day. We're 9 minutes away. Neil Dutta in a number of minutes. Claudia Sahm will join us, and I just learned with Dr. Sahm will be Mark Zandi as well. Zandi and Sahm together on the Jobs Day. We digress. Paul's just looking at what the Wawa is going to have a gallon of gas.
Yeah, I'm looking at $3.29 a gallon national average for gasoline. I got it for $3.17 a couple days ago, so beat that. So talk to us about the U.S. as a supplier. Just in the last 10 years, the U.S. has gone from a net importer of oil to a net exporter of oil. Does the U.S. does the U.S. talk to OPEC and OPEC Plus? Because it seems like we should be, but I'm not sure we are.
Yeah, there's a lot of, I think, what I would just call, personal and business relationships between U.S. executives and OPEC members, but we don't talk to them strategically in terms of
coordinating. Why isn't the head of Chevron and Exxon, why are they not in wherever the OPEC people meet, every couple months or whatever?
Well, they have their own mission, right? And Chevron and Exxon and all the other big U.S. companies, I mean, they have growth plans. And the growth plans are much more modest than they were a few years ago. But, it would be tough for them to participate in anything related to kind of cartel economics and decisions. But the U.S. is the big problem for oil price, right? Like we've grown, we've accounted for about 70% of the last 10 years of oil demand growth has come from the U.S., the supply side.
Okay.
that's not leaving enough room for everybody else to grow. But everybody else still needs to grow, wants to grow, and that's how you get a oversupply.
Right. Michael Dell would put me in the timeout chair if I didn't let you sell University of Texas Chemical Engineering. It's like a major world-class program. What's the investment people like Michael Dell, people like you are putting into Texas Chemical Engineering right now?
Yeah, look, it's still a big field, right? People are thinking about peak oil demand and the end of petroleum, but chemical engineering is so much bigger than that. I happen to be on the petroleum side, my background, but it's still a very thriving engineering college, right? And it's not going away. And we don't think oil demand is peaking anytime soon anyway. It's not. I think a lot of these forecasts that are out there are way too optimistic about, like, hey, in 3 years oil demand will peak. We think some of that is silly.
How do we get kids to love engineering?
Great question. I think you have to like really get them with their imagination. If you just throw a ton of math and say, hey, we can teach you how to really love math and chemistry, you're going to run most people off before you can even get their imagination.
Thank you. It's a disease. I see it every day.
Which part?
They're grinding math into the kids and they're walking away.
Yeah.
I see it every day.
Yeah.
There's the whole thing here, folks, is the road from Texas to Houston, which, of course, Vikas Duvada has lived, and the answer is in between. He is College Station, Texas. So between Texas and Texas A&M and Houston, it's like Georgia. It's like Georgia Tech, and frankly, Paul, like Duke Engineering.
Yep.
There's a heritage here.
Yep.
That's good. This has been wonderful. Thank you.
Absolutely. Thank you for having me.
Too short a visit. Come back. When you're where are you based? Houston.
We're in Houston.
My deepest sympathy. It's hot.
It is hot.
Did you
it's
say
brutal.
Western?
Oh.
Like LA is 102.
Phoenix has gone like more than 100 days.
117?
I think above 100 degrees.
Do
Crazy.
something about that. Have Macquarie do something about that. Vikas Duvada,
we'll send some emails.
with Macquarie Group here before Jobs Day. Paul, we got to frame this out here. We got Dutta supposedly on deck, Claudia, Sahm, and Mark Zandi with us as well. And it's a better tape than 7 a.m. this morning. I started out with a 22 VIX and with a 21.60. Better tape. Futures negative 35, now negative 25 is well. In the the yield space, it could go any way. Paul, in recent time, I have no idea. What we're going to see.
That's okay.
In 4.5 minutes.
That's why we have the Eco Go screen here. But again, just going across the yield space, kind of steady here today, Tom. The 10-year Treasury yield 3.70% off a couple of basis points.
Neil Dutta joins us now. Neil, you are a congenital optimist. I feel caution in the Dutta win. Frame out your caution into this jobs report.
Well, I think my caution stems from a multitude of places. I mean, number one, I think the Fed's already behind the curve and they're running a restrictive policy stance. So I think I'm more on alert for downside risk to growth at this point. And then you see, articles like we saw this morning in the Wall Street Journal telling us that what's the determining factor in whether the Fed goes 25 or 50 in September is really coming down to this data point. So that's going against the data, sort of dependence as opposed to the data point dependence. I mean, Powell said he wanted to explicitly avoid data point dependence, but it seems like that's exactly what they're doing. And then I just think, look at the data as it's been coming in. I mean, what's the right tail for growth? I mean, the risks are all to the downside. Housing market transactions remain very, very weak, despite the fact that rates have already come down. If you look at global activity, global manufacturing PMIs have been quite sluggish. If you look at consumer spending, private sector incomes continue to slow and the savings rate's been getting drawn down. And so it sort of lends some support to the idea that the uptick that we've seen in consumption is unlikely to sustain. And then the third quarter is off to a weak start. I mean, look at auto sales. Auto sales were a big driver of growth in the second quarter. That's obviously not repeating in Q3. So it is what it is. I mean, so to me, there's a number of reasons to be cautious, not a lot of reasons to think that things just stabilize here on their own.
Paul, get one more question in.
So, Neil, when clients ask you hey, Neil, how's the U.S. labor market? How do you respond to them?
Well, I don't say things like it's strong but getting weaker. I say that which is kind of what Bostic was saying earlier in the week.
That's what I've been saying.
To me, we've gone beyond where we were before the pandemic. I don't think it's credible to say anymore that what we're seeing is just a normalization of labor market conditions at full employment. I think that's sort of boilerplate for people that want to be bullish. That's not what we have. Across a variety of metrics, we're below where we were before the pandemic. The Conference Board labor differential, the ratio of vacancies to job openings, hiring rates, quits rate, ISM employment index. I mean, you just go on and on. So Powell said he didn't want to see a further cooling in the job market, but since he added those, that's exactly what we've gotten.
Give me soft landing, hard landing metrics. When you sum everything together, Neil Dutta, Q4 out into 2025, what form of landing is a Dutta landing?
I mean, I think we're probably going to see growth slow to around 1.5% for a couple of quarters. I think that'll push the unemployment rate up a little bit more. And then I think by then the Fed would have already gotten on the right side of the ball, and that you start to see things perk up sometime in the second quarter of next year.
You know, Neil, we love having you on. And out on YouTube, I mean, they're ruthless, Neil. Here's what they say off of the summer Neil. There's the August Neil, which is different than I'm back after Labor Day Neil. He shaved. He's got a shirt on instead of going in cash as he was the last time he was on. Thank you, YouTube, for the tonsorial view of Neil Dutta. We're less than 1 minute away from the jobs report. Paul, what's your single statistic you're looking at?
Yeah, I'm going to, it's going to be the unemployment rate, I think, is something that the market will pay attention to, the absolute change in non-farm payrolls. We're going to look at wages as well.
I think I'm looking at wages.
Average hourly earnings is going to be interesting. The consensus is up 0.3% month to month.
The consensus, folks, I can't say enough how optimistic ECO Go looks on the Bloomberg and versus the tone out there. And Mike McKee has the whisper number at 151-ish, I believe, and the survey is 165. We welcome all of you on YouTube. Subscribe to Bloomberg Podcast. It's the best way to help Lisa Mateo. Good morning across this nation on Bloomberg Radio and Apple CarPlay, Android Auto as well, the American Jobs Report. And it comes in light. Whoa, this is a big move. Going to see it now. The 165 survey, the whisper number was correct on direction. 142. I do not have the revision of the previous 114, but I have a 2-month revision last month, negative 29. In this month's revision is negative 86. So I take 142 and I subtract out 86, and I got a sub 100 summation of those two. Paul, look at manufacturing payrolls, survey -2, and it comes in negative 24,000.
So the headline number, Tom, change in non-farm payrolls came in at 142,000. Last month revisions down again, Tom, went from 114,000 to 89,000. So a weaker than expected labor market.
30-year bond under 4%. The 10-year yield down 5 basis points, 3.68. 2-year yield craters down 8 basis points. These are all lower yields. 2s, 10s comes out a little bit off that 0 point, a little bit of normal curve. And the 10-year real yield, 1.63 at 7.8. On a wage growth, better wage growth than expected year over year. Survey 3.7 came in 3.8. And the month over month statistic, as Paul mentioned earlier, up. We go 0.2, survey 0.3. Came in at 0.4. I have the revisions in right now. These are absolutely critical. Let me start over here with futures at negative 20. Last month was 114,000. It is revised under 100,000, 89,000, positive 89,000. So I've got 142,000 as the jobs report, and the 2-month revision is 86. So Paul, do the math with me. 6 take away 1 is 13.8 is 51,000.
Yep.
I think 56,000, 56,000 positive is the summation with the revision. We jawbone along here, folks, with futures deteriorating negative 26. And again, the 10-year yield 3.66%, to give Neil Dutta time to look at these statistics. Neil, what does this signal for Chairman Powell?
Get going. That's what it signals. Go 50 with a promise to do as much as necessary to stabilize labor market conditions.
So again, Neil, I mean, and you think about these numbers and the revisions, as Tom was just summarizing here, the labor market, I guess it kind of falls into what you were just saying minutes ago, not nearly as strong as people think it is.
No, I mean, the 3-month trend on non-farm private payrolls is running below 100,000. I mean, that's not a good number. That's barely break even. And I think it's arguably actually worse than that, because one of the reasons why the number even looked as good as it did is because we saw an uptick in construction employment among, I think, civil engineer contractors or something like that. And so that's not going to last, because everything we know about construction right now is that units under construction are collapsing. So why are we hiring all these people to build what exactly? That implies a margin squeeze for builders, which I don't think they can tolerate right now. So I think it's the goods producing side. I mean, Tom mentioned manufacturing. I think that's notable because a lot of people were thinking maybe you'd see some uptick in manufacturing because of the unwind of the retooling. It just didn't happen, right? And the good side of the economy is weak. Cyclically sensitive industries are sluggish. And, this is all about the Fed trying to create a handoff from income-led growth to credit-led growth. That's what this is about. So they need to keep cutting until the credit-sensitive areas of the economy turn.
Joining us worldwide, Neil Dutta. We are commercial-free to the 9 o'clock hour. Claudia Sahm, Mark Zandi will join in a moment. Ben Laidler will join us on the equity market reaction and the view forward here later in these 20 minutes. Futures at -17. The VIX was a 22 level, comes in nicely, 20.76. Major bond market adjustments, make it 8 basis points. 2-year yield 3.66, 30-year bond well under 4%, 3.98%, 10-year yield 3.67%. Neil, I want you to frame out for us what inflation will do given a depressed GDP and the job market moving. The second derivative here is moving to a worser space. What does inflation then do? Further disinflation?
I mean, absolutely. I think so. I mean, if you look at core goods, non-housing services, and housing rents, I mean, those are the 3 ways to slice the inflation data. The entire shortfall relative to the Fed's target is in housing rents, which we know will continue to normalize given the lagged, sort of nature of that indicator relative to market-based rents. Everything else is basically normalized. Again, I mean, what's the upside risk for inflation if growth is running below potential and the momentum under the unemployment rate is higher? I mean, unit labor costs are running basically flat for the last year. So there's no more of an inflationary impulse coming out of the job market. That story is completely over. And the Fed continues to run a very, very restrictive policy stance.
Paul, get one more in here.
And Neil, the unemployment rate, just for those that are going to be watching the headlines, it stays steady at 4.2% here, right in line with expectations. What does the Fed think about an unemployment rate of 4.2%, do you think?
I don't think they should think about an unemployment rate of 4.2%. I think they should think about what's gone on over the last 6 months.
There you go.
It's gone out.
No, it's absolutely
Neil Dutta, I know you got to publish. We'll feature that out on Twitter. Neil Dutta with Renmac will publish. We thank him for careful market economic analysis. We now bring in Claudia Sahm, Chief Economist, New Century Advisors, and Dr. Mark Zandi, Chief Economist at Moody's. We had them on here 30 or 60 days ago. Can't remember. It was just lights out. Great, great analysis. Claudia, I want to get this out of the way so we can move on to the real Claudia Sahm. I'm sick of the Sahm recession piñata. Can you just give us an update without tar and feathering your reputation? Are we close to a recession, Dr. Sahm?
So the increased unemployment rate is in a range where we have historically been in recessions, right? But that's a history, that's a past. We're not in a recession right now, but we do have a weakening labor market. Right. So like that's the important takeaway, but like not a
Right.
recession right now, but a risk, always a risk.
And what I remember from 2008 is the Zandi rule. There's the Sahm rule,
Right.
but there's also the Zandi rule, which is to be optimistic about America. Mark Zandi, if we get the deck of cards I hear from Neil and others, and you, frankly, at Moody's as well, can corporations adjust and sustain off of a lower nominal GDP, decent revenue, and decent earnings? Or do you just suggest everything goes down?
Tom, I think they're doing just fine. I mean, looking at corporate earnings, they feel pretty good. I mean, through Q2 of 2024, double-digit year-over-year growth. And, expectations of analysts always are on the high side, but they're still pretty good as well. So I think the economy is doing fine and producing enough revenue growth to keep profitability going strong. So, yeah, I'm not worried about that. And, just broadly, I'm all on board with the view that the Fed should be cutting rates and normalizing them very quickly. But today's report, I thought, pretty much down the strike zone. I mean, the kind of underlying job growth is 100, 150K. That's kind of where you want it. 4.2% unemployment. That's kind of where you want it. You saw a tick up in hours worked per week. That's, feels pretty good. Wage growth is, almost exactly where you want it. I mean, yeah, you can split hairs, but come on. When are we going to say this is a good report? This felt like a really good report to me.
Is it to the point there, Mark, where the Fed can stay at 25 basis points, or is this something that some are suggesting may push them to a 50 basis point cut in September?
Yeah, I think it's 25. I mean, I would expect the Fed to cut 50 only in emergency if, markets are really evaporating or there really was some serious deterioration in the economy, job market. But I don't see any of that. So I think it's a quarter point. And there's, I think there's good arguments to cut in a consistent way. But I don't think we need to dramatically cut all at once because there's a lot of reasonable uncertainty as to, where the Fed should be going here. What is the so-called equilibrium federal funds rate? What's the rate where policy is neither supporting or restraining growth? That is very uncertain. And I think given that, I'd go cautiously unless pushed to do otherwise. And I in this report, I don't see any reason to, feel like they have to move very quickly here.
Claudia, over the weekend, you'll be at some fancy cocktail party and somebody's going to come up to you and say, hey, Claudia, how's the U.S. labor market? What's your response?
It's not headed in the right direction. This is the thing I'm most concerned about. Again, just, the numbers, the numbers themselves, okay, fine. It's just things have been slowing and weakening, and not because I am, hair on fire that a recession's around the corner. Right. I'm really concerned that we're slipping away of a really good labor market. And we need this as good as it gets. And there should be nothing weaker than what it takes to get inflation down. And we are the train is still moving and is not in the right direction.
I mean, to both of you and folks, we've got huge academic caliber here. Mark, I'm going to go to you first, and then Claudia, same question. The ECB is trying to teach us about being non-measured. Are we slaves, Mark Zandi, to a Greenspanian measured approach? Careful, careful, careful. Why can't we go X beeps or Y beeps or Z beeps and see what happens? Why can't we do that, Mark Zandi?
Well, I don't know, Tom, that you need to. I mean, if the labor market was falling apart, yeah, absolutely. If the financial system was in turmoil, yeah, I'd move more quickly. But the economy is it's throttling back, but that's exactly what you'd want to see it to throttle back. For it to throttle back here. It's been growing too strongly, and it's kind of coming right into where you want it, and no reason to move quickly otherwise. And again, I keep going back to I don't think anyone knows reasonably so where we're headed here. It feels like the equilibrium rate is higher than it has been typically, and it's moving. So why not go cautiously? And if things start to really deteriorate, if we do start to see really significant job loss or even very weak job growth. Hey, one other quick point, Tom, I wanted to make.
Please.
The August data is always weak. We get very low response rates, initial response rates in the month of August, I think for obvious reasons, people are on vacation. And we always get an initial print that's on the soft side. And almost invariably, if you cast me back a year from now, we're going to be talking about upward revisions to the data. So, you just have to take that into consideration.
Yeah. Claudia, I got a 3-month moving average of 116,333, 116,333. I'm sorry, but that's way below anything I've seen as a normal rate of unemployment. If you take the 3-month moving average, Jason Furman will help out on this at Harvard. I'm sorry, Claudia, is measured in place, or is this a Fed that's got to go ad hoc forward?
Well, I think, again, it's like looking at how the variables are changing. The unemployment rate has been rising. Yes, it is still relatively low historically. We also have an older workforce. 4.3% is not that far from and experienced and esteemed, right? And so there's no magic number with the unemployment rate. It's watching the dynamics. It's watching the change and knowing that once that change is in place, the Fed has been trying for 2 years to cool off the labor market. That's why the funds rate is at 5% and other types of demand, right? So yes, things are cooling off. And now it's like, okay, now we need to turn that around. We don't need that slowing. So I think that changes everything.
Wonderful. Sahm and Zandi with us right now. They move the market higher. Futures -30, now -12. Deterioration in the Sweeney yield, 2-year yield from -7 basis points down to -9. Those levels, 365, 2-year, 368, 10-year, 30-year bond under 4%. Paul, you home shopping this weekend?
I might be, absolutely. Red headline crossing the Bloomberg terminal. Traders price in 50% chance of half-point Fed cut this month crossing the Bloomberg terminal. Mark, Zandi, given the labor outlook here and some of the data we got today as it relates to total payrolls and wages, what's your view of the U.S. consumer here? How healthy or how at risk is the U.S. consumer?
I think in aggregate, if looking across all Americans, they're continuing to do their part. They're hanging tough. I mean, the train is being driven by folks in the top part of the income distribution. And, I don't think it's hyperbole, but their financial situation is probably as good as it's ever been. Got a job, strong real wage gains. They own stocks. Stocks are near record highs. They own a home. Home values are near record highs. If they've got any debt at all, it's a 30 or 15-year fixed rate mortgage locked in, and it seems like everyone I talk to has a mortgage at 2.5% or 3% locked in. So by my calculation, they still have some excess cash that they built up during the pandemic when they couldn't spend that they're spending down now. So I think they're fine. I do think the soft spot obviously is lower income households. They clearly are struggling. They got nailed by the high inflation. They took on a lot of debt to supplement their income, to maintain their purchasing power. And it's one thing when rates are low, but when rates are really high, that means the credit card rate is 22%, a record high. That's very painful. They don't own stocks. They don't own a home. They rent. So, very different kind of perspectives. But, at the end of the day, it's the folks in the top middle parts of the distribution that
here we go.
Are critical here.
I mean, I can't keep up. Did we tried to get John Williams on the show? Yeah. Claudia, Mark, Zandi, John Williams. That would have been good. New York Fed President John Williams says now appropriate to lower Fed funds rate. Claudia, when you were studying this at Michigan, this ex post lag, is this unusual the way our Fed is acting?
Yes, particularly in the way monetary policy is quote unquote supposed to be done. Like in the theories, right? But that's a very clean, not realistic state. I understand why the Fed, when tools start breaking down and data don't make as much sense, then you kind of crawl your way along and you want evidence. I think this Fed did lean into a very Fed-like tendency of being super, super cautious, and they have been kind of greedy in terms of how much data they wanted on inflation. And if I had to hear so many times, we have the luxury of time because the labor market is so strong. It's like, well, guess what? It actually wasn't as strong. And so there's a cost. Like they took time to get comfortable with inflation, but that probably means they do not have time to get is the labor market really weakening? Like they may need to recalibrate some and get going, I think would be the appropriate, but this is really outside of their playbook. So I understand why this is a hard case to make.
Dr. Zandi, you're a pinata for the gloom crew. I mean, 07, 08, 09, you said, everybody shut up, we're going to fix this. Zandi, pandemic, everybody shut up, we're going to fix this. Give us an optimistic touch here on how America will clear these traumas post-pandemic. China's slowing down. Claudia Sam's cats are miserable. Mark Zandi, just as directly as you can, give us, I need some Zandi optimism now, or I can't get through the weekend.
Really, I've got that reputation. I didn't know that I'm that optimistic. Well, look, just look at the numbers. I mean, top 4.2% unemployment. I mean, okay, maybe be nicer if it were 4. I'm on board with that. I mean, it's maybe on the soft side of full employment. 4.2% unemployment. We're creating a lot of jobs across lots of different industries and have been for quite some time. Inflation, that's back in the bottle, almost no matter how you measure it. So we're growing at a potential. And by the way, here's the thing that's really makes me encouraged. The economy's potential is very strong. I mean, we're seeing a lot of labor force growth. Well, that's the key reason why unemployment is notched higher here over the past year. That goes to immigration, and there's a lot of cost there, but the benefit obviously is the strong labor force growth. And look at those productivity growth numbers, and it's hard to argue that whether it's sustainable or not, but it feels like there's a lot of good things happening underneath. All the business formation we've been getting since the pandemic hit, it's probably reaping benefit, and this is all before AI kind of kicks in. So you add up all the productivity gains, you add in the labor force growth, and that's a strong, growing economy. And the trick for the Fed here is, let the economy take the foot off the brakes sufficiently to allow the economy to grow at its higher potential. That's a very different issue or problem if demand were evaporating. That's not what's going on here. So, objectively, take a step back and take a look around. This economy is good.
Paul, one quick question to Claudia Sahm, because futures just went green, which is a signal, go Ben Laidler.
There you go.
So quickly here, Paul, go to Claudia, and then we got to drag Ben Laidler in here.
Claudia Sahm, I mean, again, how do you just, when you sit back, you've had a few minutes to digest this, how's the Fed, how do you think they're going to digest these numbers today?
I think the payroll numbers are going to be the concern. And frankly, the piece of it that I found most disconcerting are the July revision, the earlier revisions. Right. The hiring rate has gotten to too low of a place, and we're seeing it in the job gains. And then to see it, July was actually even a little worse than we thought on the jobs number. And so that, Claudia, I think that takes some pause.
She said, I was supposed to have dinner with Claudia in Jackson Hole. You know what they served? Elk, and the health food was venison. I mean, there's no fish or nothing. Claudia Sahm, we got to go. Thank you so much. Claudia Sahm, just nailing these revisions. I want to mention Anna Wong as well at Bloomberg. And Mark Zandi, thank you so much for being with us. Really appreciate from Moody's his optimism on the American economic experiment. He is the bull strategist who has nailed the trip from 2018, from Christmas Eve of 2018. Ben Laidler joins us right now in this market. Ben Laidler, are you going to cash?
No.
I'm just busting his chops.
I just killed my keyboard here. No, I think this is I think we're in the early innings of a bull market. I think the Fed cut, which is just around the corner, and which we're all sort of navel gazing over, I think is the trigger for this bull market to broaden both by sector and by geography. I think the data today probably a little bit weaker than bulls like I would have liked, and it's probably a recipe for a little bit more uncertainty. But bottom line, I don't think it really changes the trajectory. I mean, this is an economy that is slowing. We want it to slow to pull forward those rate cuts. The Fed has a lot of room to cut here. I think that will stabilize the U.S. economy, and I think that will be very, very bullish for the rest of the world.
He's from the United Kingdom. We should properly introduce him. Ben Laidler, Bradesco BBI, with us right now. Paul?
Ben, so again, same question I asked Claudia Sahm, Ben, is how do you think the Federal Reserve will digest this labor data today?
Yeah, so it's probably a little bit weaker than I would have liked, and probably that they would have liked. I mean, I guess we'd all be looking for that sort of Goldilocks number that last month was an aberration. Last month probably wasn't an aberration, even though the numbers were revised down a little bit today. So I think they're probably leaning a little bit more towards 50, but I think bottom line, they're going to get started. Inflation break-evens are at 2%. They've a lot of room to cut here if they feel that they need. I would like to see them get started. Right. And I think the chances for a 50 basis point cut probably increased a little bit, but I'm not sweating the pace, I think, too much. I think there's a lot of moving parts here. I think overall this is an economy which is slowing, but let's not lose some perspective here. I mean, this is an economy that we just had a 3% inflation GDP print last quarter. That's nearly double potential GDP, unemployment just over 4%. I mean, we're coming from the start point is a very good place.
Given that backdrop, Ben, given the fact that we've got rates likely coming down, we got through a pretty solid earnings period in Q2. What are the sectors that screen well for you guys?
So I think the biggest call right now is not necessarily the direction of the market, which I think is pretty well set and up and to the right. I think it's more about the sectors you own and which parts of the world you own. I think this is a broadening bull market. I think tech's been a great place to be. It's nothing wrong with tech, but I think the bits of the world and the sectors that are much more sensitive to these interest rate cuts which are coming, it's not the US and it's not tech. It's basically everybody else. All these are the bits of the market that we've forgotten about for the last 10 years. That's, I think, where you should be kicking the tires on right now.
Ben, I don't have Apple in front of me, but you were way out front, 2018, 22, 23 and all. I'm hearing, Paul, you hearing a lot of death of big tech? I am. Ben Laidler on the Mag 7, the Mag 8, including Berkshire. You still got to own them, right?
Yeah, I think so. The earnings numbers are decelerating, but they're still, no one else comes even close. You've got these fortress balance sheets. You've got these huge profit margins. With all that, I can more than justify, the valuations. But we all know that they're posting strong growth. The valuations are, already a premium numbers. That's not, I don't think, where the surprise is going to come. That's not where the sensitivity to lower interest rates is coming from. It's everybody else that has those shriveled profit margins, that has those, depressed earnings expectations. We've just come out of an earnings recession where valuations are 40, 50% lower. That's where I think you're going to get the bang for your buck in this sort of broadening bull market and potential change in leadership.
Too short a visit. We got to get Ben Laidler on again. Next time Tottenham wins, we'll get Ben Laidler on. Ben Laidler, thank you so much with Bradesco this morning. Paul, your observation here.
Yeah, I think as Claudia, Sahm, Mark Zandi kind of highlighted here, it's still a strong, fairly strong labor market, but slowing. I think Neil Dutta is more bearish, saying, hey, the underlying weakness, I think Claudia Sahm is there as well, the underlying weakness is probably the more pronounced aspect of the labor market, that the recent trends have been weakening, and those recent trends argue for the Fed to step up here. And whether it's 25 or 50 basis points, the market right now, as our Bloomberg News is reporting, is pricing in a 50 basis point rate cut in September.
Paolo out on YouTube. We are listening to witty, smart, not young people.
Okay.
This morning we're not young.
All right.
That's except everybody.
Lisa's young. I'm not young. But
we say good morning to all of you new to the Jobs Day 92.9 FM Boston, from Millinocket down to Block Island, which means you play Jay Giles or Joan Jett. Good morning.
Love stinks. Love stinks.
is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo, the 9 o'clock hour on the East Coast. Good morning around the world. On YouTube, good morning. Subscribe to Bloomberg Podcast. It's the only way Lisa Mateo can afford Costco this weekend is the build-out of Bloomberg Podcasts on YouTube. Love to see that growth. And thank you worldwide for listening. Good morning in Bangkok. Have you been to Bangkok?
I have not.
It's on my bucket list.
Is it? Okay.
There's a place called Chiang Mai, which
sure.
is north of Bangkok. Like you can wave to China.
Mm-hmm.
It's where all the cool people retire.
Is that right?
Yeah. They have a Costco.
I thought it was like Daytona Beach. But
no, it's Chiang Mai.
Okay.
It's like there's lions and tigers. Like I'm not
Boca
kidding.
Vista. Okay.
Anyways, good morning to Bangkok as well out there. Good morning across this nation with a job economy that's a little bit challenging. Thank you, Dutta, Sahm, Zandi, for their perspective, lifting the markets. Futures negative 30. Paul, I got Ben Laidler green on the screen right now.
Yeah, I think traders are trying to figure out here what's the Fed. How aggressive will the Fed be in this couple of weeks? 3.5 minutes. We're going to go to the Secretary of Labor right now. The Interactive Brokers Bloomberg Business Flash, Lisa Mateo.
All right, and before we begin, a shout out to Logan on the YouTube chat who says, Sweeney on a Friday, summer officially over. There you go. Futures right now, we do have red and green on the screen. Another week jobs report, that's the reason for that. U.S. August non-farm payrolls, 142,000. That's what it rose month to month. The estimate was for 165,000. The prior revised down to 89,000 from 114,000. So we have NASDAQ futures down about 0.1%. Dow futures, little change. We have S&P futures, little change, up about 2 points. Traders now pricing in a 50% chance of a half-point Fed cut this month. And the Fed's John Williams says it's now appropriate for policymakers to lower interest rates. We head over to the 2-year yield, 3.68%, down 6 basis points. The 10-year yield, 3.71%, and that's down 1 basis point. Shares of Broadcom, the chip supplier for Apple, other big tech companies, down about 6%. It had weak non-AI sales. That hurt its forecast. It could have been the reason why NVIDIA shares were lower earlier this morning. They were down about 1%. Now seeing an uptick. They're up nearly 1%. Other chip stocks checking with Super Microcomputer, down 2%. Advanced Micro Devices, they were down about 1%. Now up about 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcast. I'm Lisa Mateo. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Bloomberg Surveillance, we're brought to you nationwide by BAM Mutual. They insure municipal bonds that finance essential infrastructure and provide guaranteed income to improve any portfolio. Be part of building America. Invest in BAM, B-A-M, insured bonds. Thank you, BAM Mutual, B-A-M, BAM Mutual, for their assistance today. Shaky tape early on, ancient history, 2-3 hours ago. Just green on the screen now. Futures at -3, Dow futures -25. The VIX was a 22 handle and comes in a bull market tone, 19.73. The yield's lower yield, but it's come back a little bit, 371 on the 10-year, exactly 4% on a 30-year bond. Katie Greifeld with the Assistant Secretary of Labor.
This report, I'm pleased to say we welcome Acting Labor Secretary Julie Su. And let's just go through some of the numbers here. I know you're well aware of what happened at 8:30, but the unemployment rate, it actually edged down to 4.2%. That was its first decline in 5 months. Payrolls only rose by 142,000 jobs. That leaves the 3-month average at the lowest since mid-2020. So jobs growth, and it is growth, it's weakening. Is that a concern for the administration 2 months away from the election?
Hi, it's good to be here with you. I would say that this is another job report that indicates that we are continuing to see stable growth. Jobs numbers are still up. The unemployment rate ticked down slightly. As you've already mentioned, labor force participation remains steady. Earnings are up. This is a continued sort of the steady transition, to an economy in which we're continuing to see people come into the labor market and find jobs, and it's a transition to more stability.
And I know that you're not going to opine on what the Fed should do from here, but of course the concern is out there that we could see this weakening turn into a real deterioration if we don't see the Fed lower interest rates from here. The current policy rate, do you think that that's out of step with the economic reality in the labor market?
No, I mean, and you're right. We don't comment on what the Fed will do. But again, I think overall, this is another month of many months in which I've come here and we've talked about how we continue to see job growth, right? The numbers are still up. We're continuing to see growth in various industries. We see construction, healthcare, leisure and hospitality, right? These are all signs of an economy reaching a normal, steady, stable state, and we, want to continue to create the investments that are leading to this kind of job creation. And the president will be traveling to Michigan later today to announce an executive order that is ensuring that we're not just counting the number of jobs, we're also making sure that these jobs are good jobs where families can get ahead, where people can make a steady income, where they can retire with dignity. And so these are all part of the economy that the president promised when he came to office, and the economy that these numbers reflect.
Well, building on that, Julie, let's take a look at the specifics at the sector level, because you take a look at the manufacturing industry. It lost 24,000 jobs. The estimate had been for a reduction of 2,000 jobs. And actually, the last 3 of 4 reports, I believe, that sector has shed jobs. So what's the current view on why employment in manufacturing has been weakening?
So I would say cumulatively, again, the number of manufacturing jobs created since the Biden-Harris administration began is over 700,000 jobs. This is also part of the promise that we will make things in America again, from semiconductors to electric vehicle batteries. The idea is that American workers are the best in the world, and they can and should be making things. The investments that are going into communities are also, using American-made steel by American union workers and raw materials mined by American union workers. And so, the job growth that we have seen, which again was not promised, most people predicted that it would not happen the way that it has, is not happening by accident. It's happening because of real investments and a commitment to job growth. So when you look at the overall trends, manufacturing has gone up since the president came to office. Construction had significant growth over this last month, and that is also no accident.
And I also want to get your perspective, of course, on some snafus, if you want to call them that have happened at the Bureau of Labor Statistics when it comes to data releases, because there have been a lot of questions about fair access and distribution of economic data following, of course, the February super users incident. We had the early release of inflation data in May, and then last month there was that delay to the payroll revisions figures last month. What steps is the BLS explicitly taking to address those missteps?
So the BLS has addressed those head on. We obviously believe in transparent and timely release of data to everybody. That is why I come on. That is why we release the data each month the way that we do. And so the BLS has attacked those issues head on to ensure that they do not happen again. The fact that some of the information came out not in the way that we exactly would have liked in terms of their timing of release, certainly, though, doesn't take away from the fact that this data remains the gold standard for how we judge the health of our economy, how we look at job growth, the unemployment rate, and changes to industries when it comes to the labor market.
Well, Secretary, I'd love to get a little bit more detail on what that looks like, that head-on addressing. I mean, are you considering going back to lockups? Are you potentially firing people here or hiring more? What does that look like?
I mean, we've definitely put in place, to the extent that some of them were technical issues, right, addressing those issues. Again, we are absolutely committed to timely and uniform release of data. Each of these incidents were really, different, but we are taking a systematic look at how to make sure that they don't happen in the future.
And while I still have you, I asked about hiring specifically because I spoke to former Fed economist Claudia Sahm the day after that payroll revisions delay, and she made the point that the BLS is underfunded. And of course, our reporting and other news agencies have reported something similar. So I'll put that question to you. Does the BLS need a bigger budget?
I mean, certainly nobody wants to see all parts of the Department of Labor adequately funded for the important work that we do but I'll also say to that question about the Sahm rule and what it means, a lot of that is about looking at historical data to judge what is happening now. And I think what we've seen is that what's happened before isn't necessarily a good gauge for what is going on here today, right? The post-pandemic economic recovery, the historically low levels of unemployment for such a long period of time, and the investments that are being made that have really shaken up the job market in positive ways. And so overall, the many indicators are continuing to show that that the economy is growing and that the economy is strong. And either way, obviously, it's important for us to keep on reporting the facts as they come out.
There we are, Julie Su with Katie Greifeld. We thank the Deputy Secretary of Labor for her comments. I would editorialize and say the 3-month moving average of job formation in America is just over 116,000. Good morning, David Kelly at J.P. Morgan, who said we're going to enjoy a negative statistic. We're not there yet, Paul.
No.
But the vector's in place.
The trend is there, and that's what Claudia Sahm was calling out, Tom, the trend.
Yeah, and Mark Zandi, of course, was maybe more optimistic about corporations adapting. We adapt to futures up 3, and the team just has done a great job from Jeff Hughes starting in the 7 o'clock hour. Joining us now for precious minutes, Anna Wong joins us, chief U.S. economist for Bloomberg. Anna, right now you're lobbying you're in the running for revision Economist of the Year. Give us the color of the revisions and the revisions to come into the first week of January jobs report next year.
Yeah, Tom, you just mentioned that the 3-month moving average is for job creation is 116K. The pre-revised version, because today we saw huge downward revisions in the last 2 months, the pre-revised version of the average of the last 3 months is 154K. And both of these two numbers are below the neutral pace of unemployment. But, Fed economists and various Brookings Institution economists think that the neutral rate is actually 250,000. So regardless of the 3 bips downtick in unemployment today, in fact, these job creation numbers suggest that unemployment rate will be on the trend upwards. But next year, we are going to get at least 800,000 downward revisions. Next year, I think we are going to get about 1 million downward revisions.
Commercial free for you, this important conversation. To review, folks, Dr. Wong has absolutely nailed month-to-month, 2-month revisions, and also the broader revisions out 12 months of our good statistics people. I really want to make it clear, folks, I believe in our statistical veracity in Washington. It's normal that they make revisions. With those revisions made, Anna Wong, is this Fed a slave to the phrase measured?
That phrase "measured" can go both ways. So I hope that they're thinking about measured in terms of thinking about measurement issues. And I think the Fed do recognize the problem that payrolls right now is likely overstating the actual by about 40 to 90,000 jobs per month, which means that today's 142,000 could easily be revised close to zero. And in fact, last month's payroll, now revised down to 80-something thousand, is actually probably zero or negative.
Does the Fed have an appreciation for that, Anna? And will that be reflected in maybe what they do September 18th, do you think?
We have heard Powell talk about overstatement. We also have seen Lisa Koch talk about overstatement of the non-farm payrolls. So this is why I didn't think today's report is very clear cut about the fact that 50 bips is no longer, likely. I think it's still on the table because we did see the revisions are huge today. And also the beige book was very downbeat the other day. And that is Powell's favorite indicator, or one of those favorite indicators.
Where do you think the weakness in, I guess to put into context, the slowing of the U.S. labor market, where's that coming from? Is it normalized, or is there something, I don't know, fundamentally problematic underneath the surface?
Normalized implies that something goes down to a certain level and then stabilize, but unemployment rate tends to be a highly persistent statistical indicator. In fact, out of most of the economic indicators we track, unemployment rate usually just either go one direction and a lot after that. So I think that it's not normalizing. It's not showing signs of stabilization. It's really weakening.
Can't wait to see the publication. Anna Wong and her team will publish here on this Friday and into the weekend. Dr. Wong, of course, driving all of Bloomberg economics. Our economic indicators, all we do here in our core effort for you nationwide, brought to you by Commonwealth. Join over 2,000 independent financial advisors. They are taking control of their growth with advisor-centric support and future-ready technologies. Grow in your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. We got green on the screen. Anna Wong driving the market higher.
I know.
Futures up 6. Dow futures up 31. It's a whole new world after all. If it's green, we can go to Fidelity. Joining us now, Denise Chisholm with really one of the most interesting jobs at Fidelity Boston, Director of Quantitative Market Strategy, and with a legacy of quant and technical at Fidelity. The heritage of what Denise Chisholm does is a big deal. Denise, are we in a bull market?
Well, you just said it's green, so I think that that's a good start. I mean, I think that that's the question in terms of what the labor market actually means to the overall stock market. And people are struggling with the Fed's cutting interest rates. Is that necessarily a bad thing? Half the time in history, it has been the Fed's cutting because they have to. But half the time in history, the Fed is cutting because they can. And that's the part that I look at in terms of the data is what is unique about this cycle and what is predictive about this cycle. And when you look at bull markets, and when you look at the weakening of the labor market, in some ways, the Fed cutting doesn't really add much to market returns when you roll all the data past 1962, which we might be focusing on the wrong metric.
But
what actually has mattered historically is earnings growth.
Yeah, okay, but Denise, when Peter Lynch didn't have to worry about a pandemic, do you have to adjust your work with Uri and Timmer? Do you have to adjust your work because you're coming out of a pandemic?
Always in the sense that there are no analogs that can help you. So to your point, it is always different this time. And there are a lot of differences in the data. So what you can do is to study those differences to see if those differences are predictive and to find out what those differences mean to the overall stock market. Unemployment rate is actually a great indicator to study because as much as we're all laser focused on it, what you'll find is when you look back in history, a rise in the unemployment rate such that we've seen isn't necessarily bearish for the overall market. In fact, some of the time, even when the stock market's gone up, so some of that is recessionary fears, but even when the stock market's gone up before it, a rise in the unemployment rate hadn't been a problem because some of that, historically speaking, like the mid-60s and the mid-90s, is driven by an increase in labor supply. So the nuances in the data, the study of history, can actually help you identify the differences and help you understand what is predictive on a go-forward basis.
All right, we're speaking to Denise Chisholm, Director of Quantitative Market Strategy, Fidelity. Remember, up in Boston time, we're now on 96.9 FM. Big signal up there, so for our friends in New England. Denise, if I talk to equity bulls here, they're telling me I've got a pretty solid earnings backdrop. I've got a Fed that's about to cut rates. That sounds pretty constructive. What are the black boxes of the Fidelity quantitative group? What are they saying these days?
Yeah, I will say I'm not a black box quant, so I'm not systematic by nature. As we just talked about, it is always different, so I like to evaluate those differences. And that's the part that's interesting about the Fed cut. I think that you hear a lot of strategists say, well, this is a bullish thing because it's adding to accommodation, or this is a bearish thing because the last two times the Fed's been cutting, it's been because we've been in a recession. So I think that the struggle around that data is what is unique. And to me, what is very unique this cycle is the elevated level of the Fed funds rate itself, now above 5, with the juxtaposition of of inflation actually being below average or below 3. And that, as much as it sounds very restrictive in terms of monetary policy, when you look at that historically, that's actually been a really good setup for the equity market because the Fed has the ability to cut.
Okay, but what's the linkage here of the Fed to an equity account? I mean, let's say somebody owns a few shares of Will Danoff up at Fidelity. What is the linkage here of Fed action now to Danoff's contra fund? I don't get the linkage.
Well, there's not a big linkage. What I just said was, in some ways, when the Fed is cutting interest rates, your equity market returns will down off aside. Your equity market returns run around the same average as when the Fed is hiking interest rates. So there's not a big differentiation in terms of what's the value proposition to own any given fund because of the Fed. And I think that that's the key factor that I want to change the investor focus to, all about the Fed, all about an indicator that really has provided very little signal when you look historically, because it's the why behind the Fed that matters. The parts of the data that can help us understand that why are things like bank willingness to lend, earnings growth, the acceleration in leading indicators. And right now, data can always change. They're actually pointing in a fairly constructive direction.
Okay. Denise, thank you so much. Denise Chisholm joining us from Boston today with Fidelity. And again, we welcome all of you on 92.9 FM, loud and clear, Devonshire Street, Boston. Bloomberg Surveillance, we're brought to you by Interactive Brokers. Their bond marketplace, access their vast selection of over 1 million global fixed income securities, no markups, no built-in spreads, low transparent commissions. Learn more at ibkr.com/bonds. Paul, it's been a roller coaster day. I mean, it's like -30, -35. We're 9 minutes to the opening. We're flat. Let's be collegial. The VIX goes 22, under 20 to 19. And I think the odd thing here was Mark Zandi's optimism.
He was, Tom, you're right. And I guess you can say, it's the numbers are still positive when you look at the metrics, 4.2% unemployment, those types of things, the fact that jobs are still being added. But I think, it was great to get Claudia, Sahm, and Mark Zandi together because you kind of compare and contrast a little bit. Mark being a little bit more optimistic.
Yes,
you just
brilliant.
look at the absolute levels were okay. But Claudia would say she's kind of looking at the near trend and signaling that's what you need to be focusing on, and that is weaker on the margin.
Joining us now, economist Lisa Mateo. What does it say that Costco came out with earnings yesterday? I mean, it was like NVIDIA 6 months ago. And I'm sorry, help me here, Lisa, Dollar General's really struggling.
Yeah,
Walmart's Walgreens, is a crater. Walgreens,
yes, but Walmart doing great.
Walmart's doing great. Costco, they're lined up at the hot dog stand.
It's good. I mean, the in-store traffic, online shopping too at Costco is up.
Oh, you can online at Costco?
You can online.
You can buy a year's supply of bananas.
They will
deliver a year's supply of bananas.
Yes, and toilet paper.
See, I thought it was you order online, then you go pick it up. But you can do that too, right?
No, you can do that too, yes.
But they can deliver to okay, I got it. So it's just everywhere.
The first thing I looked at this morning when I came in is Atlanta GDP Now, which is moving the GDP number every single day, which I don't think is constructive, but hey, it's a number. And it's just under 2.1%. And to Dr. Zandi's approach, 2.1% plus some inflation gives you that animal spirit to keep corporations go. Look at this now. 7 minutes to go and futures are up 10.
Yep.
I have to go home. I can't deal with this.
Exactly.
It's just too much volatility, Paul.
And we've got your VIX, Tom, as you said, now below 20 here. So we'll see. But I guess what the market's trying to figure out today, when we look at the WIRP function, WIRP, the market's trying to get a sense of this data today.
What did Mike stop you on near the Cheez-Its?
He wants me to promote the WIRP function.
What's it called? WIRP?
World Interest Rate Probability. And the market's pricing in a big cut, now looking at maybe 50 basis points for the September meeting. So that's based upon, in part, the data we got today here, Tom. So we'll see. That's what I think the market's trying to figure out today. What does the Fed do? And Ira Jersey pointed out in a note that we got some inflation data next week, and that is going to be the determinant per Ira Jersey at Bloomberg Intelligence.
Can we do a little bit of entertainment? I mean, Labor Day was a disaster. I'm sorry, Paramount's legging down, as they say.
Oh, boy.
There was the enthusiasm of mid-August. It's not to critical support, but Larry Ellison is really, I mean, the secret's out. He's
Yep.
the one taking it over.
Exactly. So you got Paramount Global down about 30% this year, but it looks like that deal's going to go through. And Larry Ellison, he's putting up, now we saw in a regulatory filing yesterday, putting up most of the equity behind the Skydance offer. I guess no surprise since he's one of the wealthiest people out there, and it's his son after all. But to the extent that people were looking for other strategic or financial buyers to step in and be big, doesn't seem to be the case. It seems like it's Larry Ellison.
On YouTube, thanks for listening. Subscribe to Bloomberg Podcast. Rich from East Hampton emails in. He says we sound like a Costco ad.
Yeah, that's what I hear.
It's a huge impact. I mean, it's like, you know,
I go for the hot dog. I don't know.
It's like doing well where there's a lot of struggle out there. I think that's important.
Walmart as well. You know?
We'll get Joe Feldman, I think, published on it today. We'll get him on here from Telsey as we can. Red and green on the screen right now. NASDAQ fractionally red, but everything else, and particularly off 3 hours ago, lift. If you're just, excuse me, if you're just joining us, it's real simple. Jobs day, a little light, 165 the statistic, 150 the whisper, came in at 142, a negative 86,000 revision. Thank you, Anna Wong, for perspective. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. It comes after the latest read on the labor market could be flashing a warning sign for the Fed. August non-farm payrolls came in weaker than expected, 142,000 after July's surprise number that was revised even lower to 89,000. And there we have it at the stocks exchange. Is that the Giants? Look at that. The Giants ring the bell on Wall Street. Gotta love that. Rich, what's the reason behind it?
New York.
It's Mr. Goodell.
I know.
Mr. Goodell here. In our Bloomberg studios, we're wired into TV stations worldwide.
Yes,
for those of you on YouTube, good morning. Matt Miller is going all Giants here. John Mara, the Mara family's represented. Thank you, Rich Truman.
I love that.
For that. It's okay. The New York, they're another team in New York.
But that's what caught my eye.
Really?
You see
Victor
the blue.
Cruz showed up?
Victor Cruz? I have a jersey
My
of him
word.
signed.
Have you ever? We have to be sure.
We gotta get to the numbers.
Rich, the day that The Rock rings the bell at the New York Stock Exchange, Lisa's got to show up. Are you done? Or
No,
you
we didn't even
continue?
get started yet.
Go.
Okay, here we go. NASDAQ up to 0.2%, 31 points at 17,164. The Dow up 0.1%, 76 points, 40,831. The S&P 500 up 0.2%, 11 points, 5,513. So let's get to the 2-year yield. 3.71%, down 2 basis points. The yield on the 10-year, 3.73%, and that is little change. Want to go to currencies? We have the dollar stronger, Japanese yen stronger too, with the euro, British pound, euro's weaker, British pound stronger, but Bitcoin, it was down earlier. Now it's up nearly 1.5% at 56,000. All right, for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash.
Lisa, thank you so much. Just a shout out to the team, Giuseppe and we had all these different interns in, and they went home. And today has just been great. We continue strong. Stuart Kaiser joins us now, head of U.S. equity trading strategy at Citigroup here. And the word he used coming into the studio is it's not like early August. This time is confusing. Describe our confusion, Mr. Kaiser.
Yeah, good morning. Look, I think you got the payroll print right in the middle of the range, and that's probably the most confusing outcome for equity markets. Is it low enough for the Fed to cut? Is it high enough to believe the economy is still resilient? And if I'm an equity investor, how do I kind of respond to that? Unemployment rate about flat, so you didn't get a signal there either. So I think equities are probably going to take their cue from the rates market at this point. And you guys were looking at the warp before, and how much cut is priced into there. The equities are probably going to take a pretty big signal from, because I think the data today was just not as informative as it could have been.
So on your desk at the Citi trading desk at 490 Greenwich Avenue, downtown Manhattan, what are they saying? Are you guys taking positions? Are you taking risk for your clients, or maybe just waiting to get more data, to get more conviction one way or the other?
I think this week has largely been a sit on your hands type of week and wait for the data to come out. And I think that applies to the banks, and I think that applies to clients as well. You had a sell-off on Monday. Maybe in a typical week, you might have had a little bit of a buy the dip mentality, but I think a lot of folks said, how can I add risk ahead of this event?
In your experience, if you get an Andrew Hollenhorst market, where Citigroup's been out front saying there's going to be a rapidity to the rate cuts, the corporate world's assuaged by that. I mean, corporations adjust given a new lower rate regime, right?
Yeah, I think corporates would like it in terms of balance sheet management, refinancing, things of that nature.
Yeah.
Equity markets will not like it. I think if you have to cut 50 because growth is slowing that rapidly, equity markets are not going to get enough support from rates initially. Obviously, eventually markets will stabilize, but the initial reaction, I think, to a 50 basis point cut would be, wow, they clearly believe that they're too restrictive.
Okay, cut to the chase here. It's the end of the year. Everybody's in a panic to stay employed somewhere in the vicinity of March 31. Are we going to see strategists cutting their S&P outlook?
I don't think they're going to cut for this year. I think, what they do for 2025 will be pretty interesting. I mean, 2024 is almost baked in the cake at this point. Earnings have been pretty solid. Equity markets are up mid double digits. I think the question is going to be, if we are decelerating from a growth perspective, what does that 2025 EPS number look like? And you could have a little bit of a balancing act here, right? Where earnings growth is slowing a bit, but you're getting some rate cuts, which are supportive for valuation. So it'll be something for everything type outlook. But to me, it's the 2025 EPS number. What does that look like for next year? year will be the key.
Tom, Morgan Stanley's U.S. economics research team is out with a note here saying modest rebound in jobs, easing coming, probably 25 basis points. So they're sticking with their 25 basis point forecast there at Morgan Stanley. Stuart, given that, is this now going to be an earnings-driven market, do you think? Is that kind of what's going to be the primary determinant going into next year?
I think early next year it will be. I think the next couple of weeks, months are just going to be very much macro-driven.
Okay.
I mean, we need to see what the Fed is going to do. We need to see if this slowdown in the jobs data is real. We need to see, what kind of momentum we have to the upside in the unemployment rate. So earnings will matter, but
Right.
it's very hard for earnings to matter if the Fed is cutting 50 or if the labor market is printing, let's say, sub 100K jobs.
Good morning across the nation, 99.1 FM Boston, Bloomberg 11.3, our flagship network. Here in New York, good morning, 92.9 FM Boston. Thrilled that you're with us. Thanks for the feedback. I'm going to go to 313 this morning. SPX futures cratered. We're up over 1.1% now. Dow up to 20. SPX green up 18. NASDAQ lags a little bit. The VIX from a 22 handle. It's a Stuart Kaiser derivative, Paul Sweeney. We're into an 18.86 in a stick. 3 big figure move on the VIX. That's all you got to know.
Absolutely, Tom. Stuart, what sectors look good to you guys at Citi these days? Given we're in a pretty decent earnings environment, it looks like we've got rates coming down. What sectors screen well for you guys?
Yeah, look, a lot of that's going to have to do with how the economic growth, kind of evolves itself. I would say that, if you want to stay in the growth trade, the stuff that's underperformed has kind of been more in healthcare. On the cyclical side, I think
But healthcare's underperformed, right?
It has, but I mean, if you want to be in growth, but you're a little bit worried about tech risk reward, for instance, I think healthcare will be a second option there. I think there's a lot of folks that are very positive of financials and banks ahead of the election. The other sector, and I'm not sure that we necessarily have a strong view on it, is energy, which has lagged so much. But is very much in that cyclical camp. So to me, as a house, as Tom mentioned, Andrew Hohenhorst has a recession back half of the year. So I think that means you need to be relatively conservative in terms of how you're allocating stuff. That puts you in things, I think, like healthcare and staples and the like. To me, the wild card there is tech. If you looked at it fundamentally, you'd say this thing is defensive. If you look at it from a positioning perspective, you'd say there's a lot of embedded risk there. And if you saw what happened Monday positioning took over that trade. So I think tech to me is the one that has the most debate right now.
How about AI? Is the AI frenzy
AI.
over? Is that?
We haven't mentioned it all week.
I know. That's what I'm thinking. Is it now? Is that peaked a little bit? We kind of hit post or peak and AI.
It does feel like that a bit, just in the sense that you saw Broadcom overnight traded off, NVIDIA traded off on earnings. You're kind of waiting until early next year to see what the new chipset out of NVIDIA does.
Oh, come on. It's September 30. We're going to go out 4 weeks. October 1 to October 10 is going to be a freaking frenzy of AI nirvana, right?
We'll see, Tom, because I do think sentiment has shifted a bit. People are very hesitant to buy the CapEx spending right now. The people that are spending CapEx on AI, I think people are a little cautious about. And I think on the recipients, which would be Broadcom and NVIDIA primarily, people are a little concerned about, the continued upside to revenue outlooks and where the valuation is. So, yes, in earnings, going to be a huge talking point. Whether those stocks respond will be interesting.
Is your trading desk like the show industry? I mean, is it that nuts over at Citigroup?
It used to
where,
be.
I mean, are they throwing things at you?
I've never seen the show industry. I haven't had anything thrown at me in at least 20 years, though. So, but that's because I'm a friendly guy.
I mean, how has the trading desk changed from when Paul Sweeney was taking them out to $300 lunches 30 years ago?
It's a lot quieter than it used to be, honestly. Big news comes out, you don't hear people yelling, you hear the ting, ting, ting of the computers, right?
That's
so
because
it's just,
they're watching Bloomberg Surveillance.
Of course, they can't concentrate on the markets.
That's the story of life. I look, Stuart, here at this bull market, and we walked in here, slit your wrists at 5 a.m. Futures negative 30. We've done like a 40-point swing in SPX futures today. Is that the future? I mean, is that what Q4 lays out to be?
I think for the next couple of months, the market's going to be very, very sensitive and jumpy on any growth data. I think we saw that on ISM earlier this week. To your point, this was viewed as a very binary event. If we print above consensus, the market's going to recover because all of this slowdown, fear was overdone. If we print, sub 125K, it's recession around the corner. We need to sell off. So I think that what we got was something in between, which has sort of stabilized markets, but not resolved the confusion or sorted out the uncertainty. So that means the next month or two, incoming growth data, much more important than it's been for at least the last 2 years.
There you go. I mean, we're data dependent, Tom, but it's not.
We're data dependent.
I guess so, but I mean, again.
The one common theme I would suggest is everyone agrees the Fed's way behind.
Yes.
Whether right or wrong. Stuart Kaiser, thank you so much for joining us today. It's Friday. I'm going to tear up here.
It's Friday. I'm in the office.
With our final news here from New York City before he gets on the Gulfstream to San Francisco, Michael Barr. Good morning, Michael.
Good morning, Tom, Paul, Lisa. The 14-year-old boy accused of fatally shooting 4 people at a Georgia high school has made his first court appearance today. Teenager Colt Gray has been charged as an adult with 4 counts of murder. He did not enter a plea. Meanwhile, Colt Gray's father has also made a court appearance this morning. Bloomberg's Dan Schwartzman has more.
Colin Gray, the father of 14-year-old Colt Gray, charged with killing 2 classmates and 2 teachers in Wednesday's school shooting in Winder, Georgia, has now been arrested. Director of the Georgia Bureau of Investigation, Chris Hosey, lays out the charges.
He is charged with the following: 4 counts of involuntary manslaughter, 2 counts of second-degree murder, and 8 counts of cruelty to children.
Hosey goes on to say why Colin Gray was arrested.
These charges stem from Mr. Gray knowingly allowing his son, Colt, to possess a weapon.
Colt Gray was arrested at the scene after surrendering to school resource officers. Dan Schwartzman, Bloomberg Radio.
Republican vice presidential candidate J.D. Vance commented on the fatal shooting at Appalachia High School.
I don't like this. I don't like to admit this. I don't like that this is a fact of life. But if you are a psycho and you want to make headlines, you realize that our schools are soft targets. And we have got to bolster security at our schools.
Vance made a campaign stop in Phoenix, Arizona yesterday. Democratic vice presidential candidate Governor Tim Walz was also on the campaign trail yesterday in the battleground state of Pennsylvania. Walz said former President Trump and Republicans want to give tax breaks to the wealthy and dismantle entitlement programs like Social Security and Medicare.
If you're a billionaire, you don't give a damn about Social Security or Medicare. If you're my mom, who has to pay her heat bill and her food with it, it matters a lot.
Walz spoke in Erie. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
You got to be kidding me. Paul Sweeney, 49ers selling new club with field-level seats.
Whoa.
It looks like almost like you're at a movie theater. These seats are ginormous. I mean, there's something that I could see Michael Barr in here.
Yes. Well, I'm sure he's going to
field-level premium seats in 49ers red. His light blue Detroit Lions jersey is Barry Sanders jersey.
I am going to wear it. I am wearing my Barry Sanders jersey when I go into Levi Stadium. I just to prove a point.
All right. I mean,
it's a 1,400 square foot lounge. What do you think a hot dog? What's a hot dog at Costco?
$1.50 with a soda.
You think it's $1.50 with a soda? Levi?
I'd add a 0 to that, maybe 2.
Or 2, yeah, maybe 2. I'm pronouncing it wrong. The Cache Creek Club, it's a premium ticket restricted to 30 buyers.
Okay.
I mean,
it's an elite
Jets
crew.
49ers Monday.
Yeah, exactly. There you go. I mean, nowhere near San Francisco, by the way, is this stadium.
Dumb question. Aaron Rodgers will play for the Jets?
Yes, hopefully more than 4 plays like he did last year. So big expectations for the Jets this year, Tom.
Be good. Our big expectations is give you a data check. We do this across America. Challenging job report. Thank you, Claudia Sahm, for framing that out for us. West Texas Intermediate under 70. Little bit of strength there, but still under 70. Dow up 192 points. SPX giving me a touch of green. NASDAQ goes the other way. And NASDAQ 100 down 0.6% of a percent. VIX 22 and a 19.36. Bitcoin, haven't mentioned it. Got to get there at 10 a.m. 56,000. It's been off its game all.
It has been. We'll see. A little risk asset there.
From New York City, this is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got red and green on the screen after fresh jobs data. It showed U.S. hiring fell short of forecasts in August after July's payroll number was revised down. Right now we have the NASDAQ down 0.3%, 53 points. The Dow up 0.4%, 194 points. The S&P 500 little changed, up about 3 points. We have the 2-year yield at 3.75%. That's up 1 basis point. The yield on the 10-year 3.75%, and that's up 2 basis points. Want to check with commodities. We have spot gold lower, 2,507 an ounce. We have Brent crude $73 a barrel, WTI crude $69 a barrel. Shares of Broadcom, the chip supplier for Apple, other big companies lower. This is after weak non-AI sales hurt its forecast down about 9%. How is that affecting the chip sector? Well, let's check in with NVIDIA, down 1%. We have a super microcomputer down 4%, and finally, Advanced Micro Devices down 1%. And finally, you know her. She rose to fame as that kid on Disney Channel, started a music career, created her own beauty brand. Now, Selena Gomez being ranked on the Bloomberg Billionaires Index for the first time. Paul and Tom, she's worth $1.3 billion.
Nice.
Not bad.
Kidding me?
Yes, Selena Gomez.
She's in like a Woody Allen movie, and she's cruising down Fifth Avenue like she owns it. I guess she owns it.
She does.
Yeah. Thank you, Lisa Mateo. Thank you, and have a great weekend as well. We're going to stagger into the week. Lots to read over the weekend. I'm sure there'll be a lot of publications of Tough Jobs Report, but part of it is political. Joe Matthew, Katie Lyons leading Balance of Power. You'll see that at 12 noon today. Very importantly, a debate will be had as well. David Gura leading our coverage at the debate in Philadelphia, and not a small matter. And I sort of get the feeling the rules are still being discussed this close.
I've seen the rules. I mean, they seem to be agreed upon. I'm not sure anybody's particularly happy with them. I know that former President Trump is not, but first time to get together. It might be the only time they debate. I don't know. So I think a lot of people will be tuning in,
Hopefully
although it is a tad late.
Yeah, I don't know what our schedule's Monday. Maybe we can get Gura in here Monday. I mean,
okay.
We'll have to see. But what he's got going. But a big debate, and it'll be interesting to see. Tiffany Wilding joins us now. We finished strong with Tiffany Wilding of PIMCO as she publishes and discusses with portfolio managers at PIMCO our path forward. Tiffany, let me give you the drama and then pull me back. Are we heading towards recession? Is there a path here to stagflation or other gloom?
Well, I mean, I guess I would have to say that in any given year, at least if you look historically, there's about a 15% chance of recession. And we would argue maybe we're a little bit elevated to that, but it's certainly not our base case that we'll run into a recession. And when we look at not only the labor market data that we got this morning, but a broader range of data, including retail sales and consumption, what we see is just an economy that is normalizing after a series of shocks, including the pandemic, but also a pretty big immigration shock that's been happening over the last few years. And those things are just kind of running their course, and they're normalizing. And as a result, we're getting an economy that is slowing, a labor market that is slowing, but it doesn't appear to us to be crashing. So we don't think that we are in recession yet. For example, obviously there's been a lot of focus on the Sahm rule, which suggests that if you get the unemployment rate that's up 50 basis points, over the course of a year or more, then that has been a pretty good indicator that we're in recession. The unemployment rate increase has obviously been driven by an increase in labor supply and that immigration. So it's a little bit different this time, but overall the economy is slowing.
How would you characterize the labor market, given the data point we had today? We've heard different views. Mark Zandi at Moody said, hey, we're still okay. Claudia Sahm said, no, if you look at the recent trends, it's really weakening and maybe more than the Fed would acknowledge. How do you view the U.S. labor market?
Well, I mean, if you just look at the job creation needed to keep the unemployment rate stable given population growth, that's about 100K or so, 100,000 jobs per month. And if you look at the establishment survey, we have been over that. Obviously we've slowed quite a bit since the beginning of the year. 200,000 jobs a month on average is what we were creating. Now it's closer to 100. It's a little bit above that. So things are definitely slowing. But I think in general, it's slowing but growing is how we'd characterize it. Now, I think the issue with the Fed is just that the economy looks much more normal. Whatever normal is now, it looks much more like 2019 than we did a year ago or even 2 years ago. Except for the fact that monetary policy is still restrictive. So the policy rate has not normalized, but the economy has.
Okay.
So we think the Federal Reserve here has room to start to cut rates.
That's why we love having you on here at 9:51 a.m. East Coast time, Tiffany, because you get right to the heart of the matter. For our listeners and viewers on YouTube across this nation, Apple CarPlay, all of it, Tiffany, when they normalize, what will the yield space and the equity space look like? How will they respond?
Well, I think historically what you've seen, if you cutting cycles that are not coincident with a recession, so-called soft landing cutting cycles, they tend to be pretty good for equities, actually. In terms of interest rates, obviously interest rates are falling as the Federal Reserve reduces interest rates or other central banks. Now, if you have a quote hard landing or cutting cycles that coincide with a recession, obviously that's bad, tends to be bad for risky assets on average, credit and everything else. And then you're seeing interest rates fall more rapidly. So in a recessionary cutting cycle, the average cuts is about 500 basis points, whereas it's closer to 200 basis points in a non-recessionary cutting cycle. That's basically what the market is pricing in now, this non-recessionary cutting cycle.
If a 50 basis point cut comes in a couple of weeks from this Federal Reserve, will the market perceive that as maybe something's underneath the surface is maybe worse than expected on this economy?
Yeah, I mean, I think that's what, certainly what the Fed has to contend with. Certainly it's possible that the market could read it as if the Federal Reserve sees more downside risks here. But I think the bottom line for us is that, the Fed certainly needs to get back to more neutral policy because that's more consistent with economic conditions now. And there's kind of a range of views as to how quickly the Fed should get there. It's more of we like to say monetary policy is more of an art than a science sometimes. And just how quickly they get back to neutral, I think, is up for debate. They could certainly decide to do that in 50 basis point increments, but I think it would suggest that they see the balance of risks on growth as certainly more to the downside. If they're starting that much faster pace of cuts.
Tiffany, thank you so much. Too short a visit. I want to get you back, Tiffany, in a couple of weeks. I think there were some really important comments there on this polarity between slowdown, Fed path, no recession, slowdown, Fed path in recession. Paul, to me, that's the heart of the matter.
No, and I think we encapsulated that with our two guests that we had on simultaneously, Mark Zandi and Claudia Sahm, kind of two different views of kind of the data that we're seeing over the last several weeks. And that's probably a similar view within the Fed as they think about what to do come September 18th.
We're going to have to see. This has been wonderful. Thank you so much. Again, into a busy week next week. Again, for Global Wall Street reading over the weekend. So many of our guests will publish. We protect their copyright. Look them up. Look up Claudia Sahm. Look up Mark Zandi. Neil Dutta on Renmac. I'm sure he'll be out as well. This is one of the coolest stories in music. They were laughed at. Who are these people? Out of Boston, a manufactured pop group? And they went into the same studio where Stevie Winwood, tiny studio in New York, did Back in the High Life.
Okay.
They went into this iconic little room in New York, and they came up with this hit that went to #1. And I have the clearest memory across New England saying, wait a minute, these are our guys?
Okay.
Who are these guys? And their name was New Edition, which to people younger like John Tucker, In Sync. Backstreet Boys. These are the guys that invented it. Good morning, 92.9 Boston. Next week, I promise, we'll do Washington music next week. What can I say? Dow up 173 points. New Edition, Candy Girl.
And when you are